Another guardsman is struck several times.
This is a coast-to-coast investigation being led right here in Washington, D.C. And this subject definitely did pick the wrong country. And we will rise together as a nation to show the world what we do here.
Right now, a coast-to-coast probe of an Afghan national accused of shooting 2 National Guard members in Washington, D.C. as Attorney General Pam Bondi vows to bring that gunman to justice.
Wild. It's just absolutely wild, that shooting in D.C. yesterday. Anyway, welcome. Thank you so much for being here. Happy Thanksgiving, everyone. It's always sad when we have to deal with the shootings and, of course, the families who lose their loved ones. It's just endless. Apparently, there's this story here on the head of the Wall Street Journal right now that the D.C. shooting suspect worked with the CIA in Afghanistan. Apparently, the individual here who was, allegedly the shooter, worked with the D.C. Let's see what details there are here. He's 29 years old. Will face charges on 3 counts of assault, including intent to kill. You've got a 20-year-old Sarah and a 24-year-old Andrew, who were the guards individuals. Let's see here. Where is the CIA comment? 357 Smith & Wesson. Where's the CIA? Special. They say CIA. Oh, here it is. CIA worked with CIA-backed military units during the war in Afghanistan. Let's see here. There's more on that. So here, the suspect had worked with Afghanistan's elite counterterrorism units operated by the CIA. According to Afghan Evac, a nonprofit, he was evacuated by Afghanistan following the fall of Kabul to the Taliban. Oh, we remember that evacuation. Interesting. Lawful permanent resident, applicants for special immigration and at-risk visa, at-risk Afghan partners. Granted asylum. Yeah, he was one of the Afghan asylum seekers. This is what I wrote yesterday. People got mad at me for saying it yesterday, but I was like, I wonder if this is one of the, asylum recipients, because the year lines up, right? And we had a lot of individuals come in from Afghanistan. So it looks like that is the correct answer. Wow, that is very interesting. Okay, so then we have... Department of Homeland Security will conduct a review of all asylum cases. Said it would conduct, right. Department of Homeland Security said Thursday would conduct a review of asylum cases. Oh, okay, that they will now. Got it. Well, a little late, huh? Wow. Yeah, this is, that's interesting. I'm going to make a mention of that. We should write down some of this as well. But just terrible. By the way, if any of y'all have any questions on what we're doing with our artificial intelligence over at HouseHack or the Meet Kevin membership, if you have any questions, you're welcome to ask. I want to be pretty engaged with the chat today, which will be fun. I think we'll get to do some fun things. Okay, so here, just want to say happy Thanksgiving to you, Lauren, and all the family. Oh, thank you so much. Okay, so let's see here. Let's go. This is where I mentioned that yesterday. This right here. This is now confirmed. So, now confirmed. DC shooter was an asylum entry in 2021. Well, I should say post the fall of Kabul. All right. So, didn't immediately respond whether they focused on such a review could take a long time, blah, blah, blah. Days before the shooting, DHS had launched a similar review of all refugees. That review was separately reopened. Okay, but apparently none of that was done. So this individual lived in Bellingham, Washington, and had 5 children. Dude, he's 27. He's 5 children. Is Burry tweeting about GME? Dude, pump it. GME's balance sheet is fantastic. I'll look at that. Let's see here. Cassandra. Let's see what he's got. What's he saying? Remember GME? Bet you don't know this. Scion Asset Management. What, they sent him a giant letter? Oh, we'll have to look at that in just a sec. We'll see what that's about. Okay. Alright, so let's make a few notes here just on this so we have it down. So, let's see. DC shooter. So what do we know now? We know he's 29, 5 kids, wife. He's got, DC shooting suspect. Drove from Washington. Oh, yeah, look at that. I got it
mentioned it earlier in the hour. Green on blue violence is something that happened a lot at those bases.
Okay. Drove from Washington. We see him. Drove from Washington. We got, let's see here, worked with a CIA-backed military unit during war in Afghanistan. That's interesting. Let's see. What else did we have? We had the shot 20-year-old Sarah Beckstrom and 24-year-old Andrew Wolf. It's just wild. It sounds like they're both still in critical condition, which is great because it means they're alive, but critical is not, the best odds of survival. Suspected weapon. Let's see here. So what else did they say about him? So he was granted asylum in April. Okay. Hold on, let's see here. Granted temporary but he had the temporary protected status. Right. For the yeah, okay. I don't know what's going on with our Restream product right now. It keeps cutting out. That's really bizarre. So yeah, like if you're watching on X, for example, it's just gonna continues to cut out. I'll tell you, sometimes the technology is just wild. Yeah, okay, that's going to crap. I'm just gonna turn that off. Because everybody on YouTube, you're fine, right? I'll just turn that off. Yeah, it should be just fine. I don't know what the deal is. Connection lost. Oh well. Alright, maybe I'll come back later. I don't know what's going on with that service. Okay, so, very bizarre. Didn't immediately respond to questions about why, if they received, let's see, was focused on Biden-era cases if the shooter received asylum after Trump took office, but he was under the temporary protected status before that. So, under temporary protected TPS before receiving asylum. 5 children. Bellingham, Washington. Wife and 5 children. Here's a little note.
Man back and teach others that might be plotting similar terror plots that they will not get away with it. Where does the investigation stand right now?
Well, it's still fairly fresh. I mean, the FBI, I'm sure, is in their computer media devices, mobile devices, pulling all that information out, all the information stored.
Let's see what the comments are on the journal. Praying. Well, yeah. Let's see here. Person is totally unimportant today. All that matters is the 2 families on Thanksgiving. Yeah, that's fair. Applied for asylum. Yeah, but he was under TPS. So unclear if he received asylum under Trump. Okay. Nope. We'll switch gears and we'll go to the GME letter in just a moment. I don't know what's going on with that. Let's get rid of those little streams there. Okay, there we go. Okay. Let's go see this GME letter. What is this? So Michael Burry. And what is this in context to? He says... Cassandra Burry. Okay, here we go. So he says... The NVIDIA memo to Wall Street sell-side analysis cited me as the first source. Also, okay, regarding the depreciation issue, fine. Remember GME, I bet you don't know this. Okay, so there's an email. There's the letter, and then it was complicated with GME in some ways. It wasn't really done in Q4 2019. Okay, so let's see what we got. So we have, thank you for writing an open letter to the board of GME, Burry and team. As a deep value, oh look, it's Keith. Oh, that's cool. Dear Burry, thank you for writing an open letter to the board. Board's inaction over the past few months, absurdly low share price, CFA, 10 years independent investor, technical analysis. Find myself averaging down into equity in leaps of a company with the ugliest POS charts I've ever seen. That's awesome. That's 2019. Man, those would have gone down during COVID there for a hot minute, but obviously we know how it all ended. Worked out. Let's see the broad letter. This was the letter. Scion owns 2.7 million shares of GameStop. As mentioned in our previous, we have concerns regarding the capital management. Given the share price under $4, we must restate that GameStop complete the remaining repurchase at once with urgency, $237 million. Given the market cap at $290 at the close, completing the authorization would retire over 80% of the outstanding shares. Depending on the timing and execution, such a repurchase would increase earnings per share dramatically, far more than any other possible action on a per share basis. Yeah. The numbers are striking. We estimate GameStop now has in excess of $480 million cash, more than enough to complete the repurchase and still invest in the business and pay down debt. At this rate, number of shares, let's see, because of the high volume we maintain, GameStop could pull off the most consequential and shareholder-friendly buyback in stock market history with elegance and stealth. That's awesome. It's a good letter, actually. Let's see here. What else do we have here? We expect GameStop's business will perk up a bit on a new console cycle. Yeah, and then COVID hit. Okay. Share price is near an all-time low, and more than 60% of the shares are shorted. Wow. Lack of faith in management's capital allocation is the default conclusion. Wow. Very interesting. Yeah. So this was, this is, I guess, Burry showing his... Let's see, looks like we have some more here. Hi, Burry. I hope this finds you well. I'm Brian Cohen, founder and former CEO of Chewy. I'm also a large holder of GameStop and have enjoyed hearing your thoughts in recent interviews. I'd love to jump on the call. And then there's the letter. Spoke with the CEO and CFO. Apparently, they did do this in response to my request. I wanted to make sure they knew I was heard. Pretty crazy. 3 of the board members are resigning, bringing in people with relevant experience. Wow. Cool. I mean, it's old news. I think it's just a way to sort of, for him to kind of like prop up his credibility a little, you know? It's not uncommon. All right, what else do we have here? So, guards become a fixture in D.C. 2 were shot. Trump calls it an act of terror. Iranian funds are flowing through Dubai. Oh, now that's interesting. You know, the Iranian issue is really something that, still irks me because we haven't, Trump argued that we were going to finalize a deal with Iran, and it just hasn't happened yet. And I don't even think talks are happening. I feel like the administration, to some extent, has forgotten about Iran. And so I'm curious to see what's going on here. I will try this one more time, though. So if you are on... I guess that's not going to work. If you're watching on... or trying to watch on X, I'm going to give it one more shot here. See what's going on. Yeah, I don't know. Sometimes X just... it cuts out every couple minutes, and then it's a bummer because it just posts the live stream like 10 times, and you have to click like 10 different links, and you only watch 2 minutes. It's basically impossible to watch. Let's see if we can fix it. So, and I can't ever tell if it's like an X server issue, or is it, the stream service? I can't figure it out, but we're about to try one more time. All right. Let's go. There we go. And then we'll get into this article here. There we go. All right. X is going live again. Okay, so what do we have here? Following Iranian funds for Hezbollah are flowing through Dubai. Okay. So Iran has sent the Lebanese militia Hezbollah hundreds of millions of dollars over the past year via money exchanges and businesses in Dubai. So probably some form of money laundering in Dubai, right? As Tehran seeks new ways to funnel money through to its allies. Remember that Binance is likely involved in this when they use crypto. And this is what they've been implicated for before. In fact, Binance just got sued for this. Binance lawsuit, we'll go terror funding. Let's see what the suit is. Yeah, here it is. So, among 300 families of among 300 citizens heard or attacked on the October 7th attack sued Binance, claiming the cryptocurrency exchange aided Hamas and other terrorist groups by transferring more than $1 billion of amongst the accounts that they controlled. Lawsuit was filed in federal court on Monday. Comes after Trump pardoned CZ. Yeah, we know about that. Binance pitched itself to terrorist organizations, narco traffickers, and tax evaders, according to the lawsuit. Wow, that's a strong line there. Oh, here it is. I mean, 284 pages, but let's type it in. Binance lawsuit, 11/27/25. All right, let's pull this up. Let's see what we got here. So, we'll pop that open, and I'd love to see what kind of evidence they have in there. So, Hamas. Binance new. Ooh, there's a lot of Hamas in here. The action is brought for Hezbollah. Yeah, see, look, Hezbollah's on this list as well. Hamas, Hezbollah. For years, defendants knowingly and willfully and systematically assisted Hamas, Hezbollah, and others to transfer and conceal hundreds of millions of dollars through Binance to support terrorist activities. I'd love to see like some screenshots or what they have. Binance rapidly grew in part because of this. Hamas explicitly named Hamas or named Binance in their videos. When other third-party compliance firms flagged Hamas, Binance did not freeze the account. It acted to protect those customers. Basically saying that the compliance was extremely dangerous for our company. Right. They don't want to be known as closing people's account like JP Morgan. But, you know, JP Morgan's closing a lot of people's accounts in crypto. These are terrorists. What do we have here? Gaza-based money service. An entity that raises funds for Hamas. Binance facilitated about $240 million worth of those transactions. Dubai Company for Exchange. Gaza-based exchange designed by the State of Israel as a terrorist organization. Designated, rather, not designed. As a terrorist organization. Sent millions of dollars annually to Hamas. I mean, what a great tool. Crypto's perfect if you're a terrorist. Great to send money transfers. Binance users, accounts. Any, like, more screenies would be cool. Attachments. Tether. Reuters noted that 75% of the $8 billion in Iran-related crypto transactions on Binance involve Tron's network, likely because Iranian users and Hamas's network favored Tron's low profile and cheap transactions. Wow. Tron. Okay. Okay, Superior Hamas. This is just some history on them. Well, that's quite interesting. I mean, these are all allegations in the lawsuit here. It'd be interesting if they showed any Binance new. What is this? Lim colleague replied, can barely buy an AK-47 with $600 regarding Hamas transactions. Explained the terrorists usually send small sums, as large sums constitute money laundering. In other words, like, oh, they're just doing small transactions. Oh, nice. Yes. Hamas affiliated social media accounts, historical use of cryptocurrency. All right. Any like screenies? What is this? Immediately after the October 7th, Binance account transferred belonging to an individual known as Ayman Khalel, equivalent $51, then $9,000. After structuring the transaction, the account stayed under $10,000. And here we have 680 to 645. I mean, this is a lot of sort of forensic accounting of work between various accounts that they've linked to miscellaneous terrorist actors, allegedly. Like, this is interesting. Look at this one. 26-year-old Venezuelan named Gustavo, a member of Hezbollah's gold smuggling operation, who has warrants out for his arrest. $30 million over here. Wow. I mean, they have all the allegations out here. It's going to take forever to go through this. Amir, an Iranian cyber criminal. Bitcoin addresses. I mean, they have everything that they have on each of these people. They've outlined in here. You know, how much of it's true and how to map all this. That's going to take people forever. That's wild. All right. So let's go back to this. This is Binance is sued. We saw that. This right here, Hezbollah, is in desperate need of funds to rebuild. Well, yeah, no kidding. Its militia after the fights with Israel. The limitations of routes have forced Iran and Hezbollah to lean more heavily on alternatives like Dubai and the UAE. Earnings derived from oil sales are sent to Iranian-linked exchange shops, private companies, and businessmen and couriers in Dubai, who then move them to Hezbollah via the Hawala method, a centuries-old system that allows users to transfer money from one point to another entirely on the basis of trust. Wow. Hey, man, take this sack of money and send it to that person. That's crazy. Funds are deposited with a dealer in Dubai and paid out by a dealer in Lebanon, with the dealers netting out or otherwise settling the accounts later. It's just a human dealer network of people moving money around. Like, basically old school carrier pigeon, money sack transfers. Wow. So that's very interesting. Somebody here says, college student, part-time sales job, high pressure, or entrepreneurial pursuit? Both. Luke, you're a college student. You could do both. I mean, like, I don't think a sales job has to be high pressure. If you get a real estate license, for example, and you do open houses on the weekend or whatever, it takes forever to get it started. But once you get the flywheel going, it's a phenomenal biz. UAE officials said the country is committed to preventing misuse of its territory for illicit finance. Hezbollah is highly focused now on rebuilding, yes. The Iran's Quds forces are tasked with supporting, and they've transferred more than $1 billion to Hezbollah since January, mostly through exchanges. Now, that's a lot of money moving to a terrorist group here. So, Iran continues, I'm presuming even after the bombing in Iran, that they're continuing to funnel money to these terrorist organizations, which then makes you wonder, you know, when is that all gonna get resolved? Maybe never. Okay, let's see here. Just get logged in here. There we go. Okay. The militant group wants the best armed non-state militia. Battered in a 2-month conflict. Yeah, we saw the 23 attacks, covered that. Once oil crashes, stuff will be crazy. Yeah, no kidding. Once a realtor, always a realtor. There you go. After a ceasefire ended, the heaviest fighting, the group is struggling to meet its financial needs. UAE has long had a reputation for being a hub for illicit forces, or illicit funds. Financial Actions Task Force Grey List for not doing enough to combat money laundering. I mean, it wouldn't surprise me. Ceasefire deal between Israel and Hezbollah requires Lebanon to secure ports of entry and prevent the flow of funds to Hezbollah, right? So Hezbollah is going to help work to make sure Hezbollah doesn't get more guns, right? Tighter airport controls. Iran is sending larger numbers of travelers with smaller amounts of cash or jewelry that don't have to be declared and can be more easily hidden. Wow. Ah, just send more people carrying money. Small amounts. Let's see what the Wall Street Journal people have to say about that. Obama supplying the pallets, no doubt. Uh-huh. Is this the untangling of the hideous web really new information? Or just revealing what lots of us have suspected for decades? Well, yeah, I mean, it's pretty obvious. But it's interesting to hear the components and how it's done. Okay, so untold story of Charlie Munger's final years. What do we have here? So Charlie Munger owned a house with a spectacular view in Montecito. Montecito's beautiful, by the way. Have you ever seen Montecito real estate? Let's go look at some. Let's see. Best advice for realtors that are struggling. It's tough. It's just a tough environment because of obviously rates. But I think a lot of people are going to leave the business, and if you can make it through it, the glory of that is you're going to have a whole lot less competition. A lot of people are just going to be like, I'm done, I'm retiring, whatever. All right, let's see here. Montecito real estate. Let's see what he got. It'd be interesting to know what Charlie, if we could find. Can we find Charlie Munger Montecito house address? Maybe we can find it. New Montecito Sea Shadow. Was this it? Created by Charlie Munger. The 22-acre enclave Sea Meadow is a guarded and gated beachfront enclave created by Charlie Munger of Berkshire. Oh, it's part of Seaside. Interesting. Sea Meadow. Huh. I don't know the details of Sea Meadow, but these are just some of the homes over there in Montecito. You get some cool stuff. But anyway, all right, so let's go back here. So Montecito, entire gated community. Locals called it Mungerville. Oh, wow. One point he told a friend he expected to spend his last years there. It's gorgeous. I mean, this is like 20 minutes from me. Jose Villa writes, course, Livestream, and Alpha Report are so helpful. Best investment I've ever made. Oh, well, thank you so much. Yeah, I mean, for those of you who don't know, I'm not going to spend a lot of time mentioning this. This should be obvious. But when the Black Friday sale is up at meetkevin.com, so if you want it, you also get the new course. We're calling it the Reinvest course. So all 9 courses, every trade alert, every private live stream, the Alpha Reports, everything. That's over at meetkevin.com. All right, so Charlie Munger here. Okay, so Charlie Munger chose to remain in his longtime home in LA, though. The place didn't even have air conditioning. That's pretty common, actually. You'd be surprised. There are a lot of people who don't have air conditioning in SoCal. Oh, there we go. All right, perfect. So Charlie Munger, Montecito Estate, Mungerville, ended up staying in L.A. Charlie Munger died 2 years ago. You know what was the saddest thing that I saw with Charlie Munger was he did an interview with Becky Quick right before he died. Let me see if I can find it. And he was upset that he just didn't make enough money. And it made me so sad. Okay, let's see here. Charlie Munger, CNBC, Becky Quick. Where was that interview? Final interview with CNBC. Found it. Okay. And then let's go transcript trillion. Okay. You ready for this? This just killed me. Okay. Let's see. Oops. Let's get the audio working so y'all can actually hear it.
I could have done a lot better if I'd been a little smarter.
This right here, this is it. Yeah. This is just what absolutely kills me. So it's like, oh, do you have any regrets? Oh, well, I could have done better. All right, hold on. Let's play it from here so we can hear it all.
And that kept me away from those businesses, totally.
But part of your advice in life, I think, is to understand that change comes with life and adapt to it. And it's something I think about a lot in my own struggles with life.
Not everybody knows that. I could have done a lot better if I'd been a little smarter, a little quicker.
What are you talking about? You've had success in everything you've done in life.
I love this response from Becky Quick. It's like, what are you complaining about? Like, what do you have to complain about? You've done great.
What would you like to do differently?
I might have had multiple trillions instead of multiple billions.
Do you sit around thinking about this? What would you have done differently?
Yes, I think a lot about what I nearly missed by being just not quite smart enough or hardworking enough.
How sad is that? Like, that is, guys, you know, I spend my last days thinking about how, you know, instead of having multiple billions, I could have had multiple trillions. You know, that's what I spend my life doing right now, is regretting how if I had just done things a little differently, I would have had trillions instead of billions. Like, I hate to say it because it just, I don't know, maybe it's mean, but I think I lost like any respect I kind of had for Charlie Munger, which should be a lot, but it made me like realize you're 90 or whatever, and you never realized like the importance of family and love and happiness or what I don't know, and who knows, like, I'm trying to understand, is he just being facetious? But I don't think he is. Like, I think he believes this. I'm gonna write that timestamp down because I think that's fascinating. So it's what was that timestamp? I want to save that forever.
It's a lot. But part of your advice in life, I think, is to understand that change comes with life and adapt to it. Yeah. And it's something I think about a lot in my own struggles with life.
Not everybody knows that. I could have done a lot better if I'd been a little smarter, a little quicker.
What are you talking about? You've had success in everything you've done in life. What would you like to do differently?
I might have had multiple trillions instead of multiple billions.
Do you sit around thinking about this? What would you have done differently?
Yes, I think a lot about what I nearly missed by being just not quite smart enough or hardworking enough.
What would you have changed if you could go back and look at the last 100 years?
Of course, it would be a cinch to go back and do it, knowing what was going to happen now.
Yeah.
I would be the richest man on earth.
Well, what did you miss?
I'd be the richest man on earth. Come on, man. Like, that's the epitome line of it right there. I'd be the richest. I'm gonna call it. I'd be the richest man on earth. Basically, you know. All right, whatever. Let's see what else he's got.
So something where you zig where you could have
started earlier, for one thing. and I would have compounded longer, and I would have compounded better.
So saved
and
even
of course,
more.
I would have ended up richer. I was going to live to be 100 years old. And I constantly am aware of the facts that I basically screwed up. Given the hand I dealt, I could have done a lot better, quite easily done a lot better.
But you are not somebody who spends a lot of money on yourself. We are living, and we're sitting here in a beautiful house, but this is a house that you lived in for 70 years.
I know.
You could have moved and spent
more.
more.
His house for about 60 years.
Yeah.
We're similar. But you see, we're both smart enough to have watched our friends who got rich build these really fancy houses. And I would say in practically every case, they make the person less happy, not happier.
Oh, that's a great line about the houses. Hold on, I want to hear that.
Who got rich build these really fancy houses. And I would say in practically every case, they make the person less happy, not happier.
They make the person is that big houses? Moke Stone, where is that? Which page is that on?
Our friends who got rich build these really fancy houses. Both smart enough to have watched our friends who got rich build these really fancy houses. And I would say in practically every case, they make the person less happy.
In every?
And I would say in practically every case, they make the person less happy, not happier.
How so?
Having a basic house really helps you. Having a really fancy house that's good for entertaining 100 people at once is a very expensive thing to do, and doesn't do you that much good.
I think one of the...
Great line, actually. Great line, right? Because that's... and then, so... Make a little follow-up note there. Also, in more cases, a big, fancy house makes you more unhappy. That's actually a good line. So, there's some pluses and minuses there. Okay, cool. So, let's move on from that. Let's get back to... you know what we should do? We should do the thing where, like... we just find the most interesting parts out of all these videos that are out there, and then we'll do like top 10 a video compilation. It's like the top 10 video clips you missed or whatever from YouTube. I don't know, something like that. But anyway, somebody says there's a spelling error somewhere. I want to find it. So what is this? Where is this? Where'd he go? Moke. The legalese. Okay, well, let's find it. On the sign-up page. Which sign-up page? Oh, let's go find out. Let's go see if we can find it. So, I'm assuming it's either going to be the Meet Kevin one or the Get Our AI. It says prices. Prices? That must be just on the footer. Prices listed. Prices listed. Maybe meetkevin.com. Let's see. Prices listed. That's weird, because here I don't see that spelling error. Prices listed here. Second sentence. That is the second sentence. Prices listed here. Huh. I don't know where you're seeing that, but I want to find it. Prices. All right. Well, Moke, wherever you're seeing the issue, I appreciate you pointing it out. Thanks for even going to, meetkevin.com or reinvest.com. Somebody says, love my 950 square foot home I'm remodeling to die in. Sounds like you're about to overspend. Sorry. So. Okay. Interesting. All right, cool. All right, so let's go into, let's see the rest of this. Home was close to people, projects, Munger spent his final years. Rather than a quiet life by the sea, Munger spent his final years chasing gutsy investments. Weeks before his 100th birthday, his investor was by the much beloved businessman, unexpected last chapter of his life. Made over $50 million from a bet on an out-of-favor industry he had shunned. For 60 years. Revved up his real estate activities, working with a young neighbor to place big long-term wagers. Real estate bets. That's interesting. Let me see here. Okay, let me pull this here. Somebody said, are you thinking about running for California governor again? No, no time soon.
Donald Trump.
All right, what is this? Trump locks Britain out of peace. $1 trillion deal shatters the empire. What's this? Thanks for beaming it over. Let's see what this is.
Trump just locked the British Empire out of the Ukraine peace negotiations. Here's a senior fellow at Britain's premier foreign policy outlet, Chatham House, admitting it on record. Europe is not involved because the United States has not seen the need to involve Europe. Translation? Trump threw them off the stage of history, which he has now done.
Yeah, I mean, but this has been known for a while that Trump is trying to negotiate without the Europeans.
Just about stopping war in Europe as big as...
And that's without the United States formally attending. It's a reminder that the center of...
Dhabi.
Great people, friends of mine from your country, and beautiful picture. And while we were taking the picture, I said, could you make it 1.5 trillion? So he's got something to think about.
The contrast between 50 billion and 1 trillion. Trump is on the verge of achieving peace in Ukraine for one simple reason. He didn't invite the British or the neocons to the negotiating table. Now, the British imperial mouthpieces at Chatham House are having a meltdown. And don't forget, Chatham House was established...
She's got a whole script written out by ChatGPT.
Then Vance doubled down, going after what he called the Beltway GOP.
I honestly, I have a hard time listening to this kind of stuff. Like, do people like this kind of stuff? I mean, apparently they do, because this kind of stuff gets a lot of views, because it just, like, doubles down on people's biases, I feel like, whether they like or don't like, you know, certain political parties.
That gets more passionate about Ukraine than about the economic crisis here in our own country. JD said, but you know what really fires up the Beltway GOP? Not any of the above. Instead, the political class is really angry that the Trump administration may finally bring a 4-year conflict in Eastern Europe to a close. The level of passion over this one issue, when your own country has serious problems, is bonkers. It disgusts me. Show some passion for your own country. Now, that's the difference. Were no-shows. And who were the so-called stars of the show? The EU's Ursula von der Leyen and Mark Carney economic agenda to phase out fossil fuels. The American system knows that human creativity...
Yeah, I don't know. I stuff like this sometimes just... I lose my mind.
Fed has decided...
What do we have over here? Money supply acceleration. Let's take a look at this one.
That it's going to end quantitative tightening, the shrinkage of the balance sheet of the Federal Reserve in December, and this continued pressure from the White House to loosen up, lower the Fed funds rate.
Going forward, and
also, and depending on how you measure it, actually, it's the biggest economy in the world too. And right now, it's probably the biggest disruptor from an international policy point of view. Very consistent.
What's your deal, Michael Myers? Like, what are you referencing? Like, the whole thing is, you've got people here who are making a whole, I mean, there's a whole 14, 15-minute video here on, oh, Trump, you know, cutting out the UK people. Like, we've known that. Trump wants to negotiate with Putin without European constraints. I think it's a mistake. I think Putin is playing Trump. But who cares?
2% inflation target is 6%. So, but it's accelerating, and the thing to watch is where the acceleration is going to go. Are we going to be on another roller coaster ride? And we might be. That's really what concerns me, because there's a lot of pressure on the Federal Reserve to loosen up and open the money supply spigots, shall we say? And when you look at that, we already have the following things that are tipping us off about...
Yeah, we're going to do demos for the Reinvest app in December. So probably mid-December to late December. But the Black Friday sale will be over then.
Where we might be going. And one of those is that the Fed has decided that it's going to end quantitative tightening, the shrinkage of the balance sheet of the Federal Reserve in December, next month, a few short days, actually. So that will loosen things up. The other big thing, and something that Matt Sikirky and I talk a lot about in the book that you held up, Making Money Work, is that bank regulations, they don't change that often, but they have an enormous impact on the growth rate in the money supply and the capacity of commercial banks to actually extend credit. And once they extend credit, of course, that increases the rate of growth in the money supply. So what
thanks, Moke.
happened is that there's something called a
I feel like, Moke, there's a chance you left a comment on that before, and then I fixed it, and it just hasn't shown up in the Google cache yet. Because I feel like somebody mentioned that before. I don't know if it was you, but I feel like I saw that comment before. And maybe it's fixed. So he says, I just sold out all my hood in NVIDIA. Did I make a mistake? I mean, you're going to be up like 10x probably. I mean, depending obviously on when you bought. You know, it depends what you do with the money. You know, I'm not the biggest fan of getting out of investing. But I'm a big fan of, you know, investing in what you believe in for the long term. You know, for me, I look at, you know, well, we've got like a list of top 10 stocks we want to buy over the next 10 years. For me, those, like, I don't care. They can go down 90%. They can go down 99%. Doesn't matter. Like, I'm making this commitment that those are the 10 I'm diamond handing, right? But the idea is the way I'm buying them is such that there's no margin. I don't need the money. I don't need any of the money for, you know, whether it's taxes or real estate or house hack investments or whatever. It doesn't matter. Don't need it. I think when you can invest with that mindset, then it doesn't matter. You know, invest in what you believe in for the long term.
The liquidity ratio. Supplemental.
Just purchase lifetime AI access, expect ROI in Q1. Hey, we're going to do whatever we could do to get everybody ROI as soon as possible. But I think it's probably going to take, I would guess, you know, I'm telling everybody the end of 2026 is when we think all the features will be live. I'm hoping we can get all the features live, you know, by the middle of 2026. Because what I really want to do is send pitch decks to all the VCs when our app is live. And then when venture capital comes in, you know, I think the valuation skyrockets and then you set up for IPO. Like, I think that's the play. No guarantee, obviously. Like, I don't want anyone to think I'm you know, trying to pitch investing in house hack, read this offering circular, you know, whatever. This is not a solicitation. But that's just sort of where my head is. I think it's kind of interesting. It's a strat, I guess.
Liquidity ratio. And that was imposed on banks after the great financial crisis in 2008. And
right, and we are lifting a lot of these banking regulations out. You know, that could always create a whole nother bubble, which I think that's the whole point. Yeah, could ignite asset bubbles. Yeah, that's the point of this.
We're going to remove that. Now, by removing that and deregulating, shall we say, that will have an enormous impact on the capacity of commercial banks to make loans. It'll give them a lot more potential firepower. The estimates are around $2.6 trillion in capacity. So that's a big change that no one pays much attention to. But it's big, and that, along with quantitative tightening and this continued pressure from the White House to loosen up, lower the Fed funds rate, that's a little bit of a yellow light flashing in my eyes when I look at what's going on. Because what will happen, I think, maybe, is that we'll get an acceleration in the growth rate in the money supply, and of course we'll have inflation won't be contained, and by the way, the bubble in the stock market will continue to expand. Because if you have acceleration in the money supply, just like we had the last time in 2020 and 2021, Julia, what happened? The first thing that happens with a lag is that asset prices go up, real estate goes up, land prices go up, the stock market goes up, all assets inflate.
Mm-hmm.
So that's my concern. So that right now,
I'll invest 100K if you give me a 5%. Well, what we're promising right now is that if you invest right now, you get a 5% yield. You know, through conversion. The only way you get converted is if the stock goes up in value. And so what I think, I actually think it's a really interesting investment, because think about it like this. If, okay, let me write this down. It's what makes me so excited about it. And like, I'm putting my own money into it. But think about this. So Q4 beta AI, you know, early sucky beta, right? Q1, Q2, beta AI features really start cranking, right? Q3, polish, maybe exit beta. and go more mainstream, right? And the reality is by Q1 27, if the AI app, fails and sucks, then you're probably, no guarantees, right? No guarantees, not solicitation. You're probably hard pressed to argue, for conversion, unless the real estate has done really well or something else, which I suppose is possible. But I would say it's almost like a hedge against getting converted, like if the app doesn't work. On the flip side, if the app really crushes it, which, I mean, so far it seems like based on how many people are signing up for it, it seems like there's so much demand for this, we're going to make it work. It already works. It's just a matter of we're going to make this expansion work, right? If the app really crushes it, you convert in, maybe 27, but the goal is to set up for IPO absent, a recession, depression, right? That's sort of just like, that's a thought that I have in my mind. I mean, no guarantees, like anything can happen, right? Like there's obviously also the worst case scenario of like you convert and for whatever reason, like the app doesn't work and real estate goes down in value, right? Like everything has a worst case scenario, of course. But on the optimistic CEO side, my vision is that, by the third quarter, we're so polished that, we're able to go, VC and, actually go through kind of the typical, funding ramp outside of YouTube. And, does that set us up for, my goal has always been 2028 to 2030 IPO. That's always been my goal. But hey, if I could exceed expectations, that'd be great. So that's a good question, but that's sort of where my head's been.
Everything seems to be running relatively smoothly in the U.S. The labor market's getting a little weaker. And by the way, that also is another tip-off as to what the Fed will do, because the Fed historically has always kept its eye more on the labor market than anything else. And now, by the way, they don't keep their eye on the money supply at all. They poo-pooed the quantity theory of money.
This guy's
the whole
right.
idea that there's a connection between changes in the money supply and changes in asset prices, changes in economic activity, changes in inflation.
Somebody says, why invest in house hike now? Well, because as rates come down, which we think the Fed's going to rapidly bring rates down over the next 6 months because of the labor market, we don't know exactly what the time frame of that's going to be. But at a certain point, it's not going to make sense to offer investors a 5%, coupon in addition to all the upside in the stock. Like, I wouldn't be surprised, if our AI really kills it, people are just like, dude, get rid of the yield, charge $10 a share, and sell it to these VCs here. And then we're going to, after we raise that, turn around and go sell it to somebody else for $30 a share. I don't know. That's, what you see sometimes with AI startups. It's wild.
Oh, it's rejected all of that, even in testimony.
Mm-hmm. That's because
the 5%, we pay it out on a monthly basis.
Talked about they have all the neo-Keynesians are over at the Fed. We need more monetarists.
You've got the neo-Keynesians in charge, and the focus is on things that the neo-Keynesian focus on. And if you look at their macroeconomic models, they don't include a variable for the money supply, by the way, but they do include interest rates. So we have this obsession with what's going to happen with the Fed funds rate, what's going to happen with the Fed funds. And it looks like, by the way, the probability of a 25 basis point Fed funds reduction at the December 10th Federal Open Market Committee meeting, that's been fluctuating all over the place.
Oh, crazy.
A month ago,
that's right.
Zoomed up from 40 to, you say it's 80 now.
I think it is. Don't quote me on it, but I'm pretty sure that's the headline I saw. But
so at any rate, this is part of the overall message that I want to get into the picture, and that is, if you focus on the quantity theory of money, it's steady as you go. You keep the money supply growing at about 6% per year, and you will end up with about a 2% inflation.
Somebody says several REITs pay more. Yeah, but you have to understand, house hike's not a REIT, Like, you compare house hike to a REIT. A lot of these companies have exposure to commercial real estate that's gone down in value. The stocks have gotten crushed because they have this commercial real estate or overbuilt exposure. And so what you're really looking at is a risk yield, Like, there's no even hope of a technology play on a lot of these. They're massively indebted. You have bankruptcy risk on a lot of these. I mean, I've seen some REITs turn into like credit CLO REITs, where they go from real estate REITs to collateralized loan obligations. And I'm like, that's retarded. You're literally going into the riskiest part of the market, reminiscent of 2006 and 2007, and they're offering 10, 12% yields. And I'm like, yeah, because, as soon as the market farts, they're going to go bankrupt. That's been my take.
But we don't pay any attention to the quantity theory of money. We have
130K. Yeah, I mean, just do the math, right? $130,000. If you invested $130,000 divided by times 5% times divided by 12 is $541. 60 and 67 cents.
Have all these ad hoc theories, post-Keynesian models, and so forth, and we have up and down, and it comes in even in the micro kind of thing, where day to day the probability of what they're going to do with the Fed funds it shifts around every 24 hours, and
okay,
that
I don't care.
You're flying blind as far as
we should send them a copy of your book too. Explore and listen. And it sounds to me like there's this real risk that we could see the resurgence, that increase in the money supply, which pushes the asset prices higher, like land, real estate, stocks. It makes me wonder, I want to hear more on the thought on where we could head, but it also just makes me wonder, we're going to only exacerbate more inequality. And the Fed says they serve the public interest of the
that's what capitalism does. You exacerbate inequality. That's exactly how it works.
The American people. It seems like that's who it hurts the most. Is inflation hurts the most. It doesn't really hurt the asset holders. It's the everyday Americans. But I'd just love to hear more of your thoughts on inflation and the concerns there.
That's a great point that you bring up, Julia. In the book that Matt Sikirky and I co-authored, Making Money Work, we have a long elaboration about the importance of
it's 5% per year paid out monthly.
The monetary policy being neutral, and no one really pays much attention to this. It turns out, interestingly enough, in the last issue of the International Economy, Secretary of Treasury Besant went on about this point that you're raising about quantitative easing. What did it do? Well, it made income inequality. It exaggerated the inequality.
Yeah.
It led to more inequality. He didn't label this as we do in the book from a technical point of view. It is neutrality, and when what we've had is non-neutral monetary policy. In other words, you should have a monetary policy that isn't distorting things and favoring one sector of the economy or one group of industries or one group of people. And the best way to get a handle on this is to show you what the Fed has done with income inequality is to look at the percent of GDP accounted for by the wealth of the billionaires in the United States in January of 2020. And that percentage was
skyrocketed.
Was 14.1%. Billionaires' wealth as a percent of GDP was 14.1%. Now, after we had this goosing of the money supply, the asset.
So here it's thank you, Kevin, for the opportunity to get into solid AI lifetime play for long future lifetime play. Been lifetime course member since 2019 and House Hack invested. Another good egg added to the basket in real estate. Oh, well, thank you, Drift. Yeah, I like my just long-term vision is just every day, one foot in front of the other for House Hack. I mean, I posted my real estate videos. Nobody cares. It's really interesting. Real estate videos, very few people watch. Then you get the I posted another real estate video yesterday, and it's worst views in a month or in many months actually. After 14 hours of being out or something, 19 hours of being out. Nobody cares about real estate videos, but I love real estate, so it's sort of all right, well, we'll. That will always be a part of Kevin.
Price inflation, general inflation measured by the Consumer Price Index, now it's 22.7%. So the income inequality has been almost manufactured by the Fed, and this turns out to be a real problem because we have an economy now. And another thing I'm very concerned.
Yeah, we know income inequality is exacerbated by the Fed. We already know that.
The top 10% of income earners in the United States. And what happens at the bottom part, as you indicated before, the bottom part of the K is in a slump because what happened with inflation is that and going down and a critical problem, and it's because of the downside on the K. And
do you think it's reaching a crisis point, affordability?
Well, I wouldn't. I don't like to use words like crisis and the sky is falling and that kind of thing. But it is a real political problem, and it's because of the downside on the K.
Somebody here says, because real estate is so damn hard to get into, especially if you already have a life and full-time career. No, it's actually a lot easier if you just start with your own home, right? So you buy your own home. You want to move, you turn your own home into a rental property. It's totally a side hustle. Totally a side hustle. That's why I think our real estate AI is going to make this a lot easier for people, because by the end of next year, I want somebody like you to be able to download the app and be like, all right, let's try this. Oh, that property looks like it needs some work, and it looks like I can boost my net worth by buying it. Well, I don't know how to remodel a property. And then it's like, Kevin's AI, how should I remodel this? Oh, damn. Oh, okay. I just call that person, and, I put that product in or whatever. And like, we just update it based on what's in at the time or what we're using at HouseHack. It basically is just a roadmap for you to go pick up the net worth. That's the vision. That's what we want to have by the end of next year.
And where does that come from? Well, again, a lot of it comes back to the Fed. Now, also, the Congress is on the hook for this, because what goes into this year and a half, maybe 2 years ago, and that is the stop quantitative tightening. Pretty steady.
Pretty steady, yeah. What's the probability of a recession for you today? Like, what is that probability? Maybe the next 12 months? Like, has that shifted or changed?
Well, out of all the things that Greenwood and I predicted, we got the boom after COVID, and as you said, we also got inflation after COVID. So those two we got right. We said the economy would boom, asset prices would boom, and we'd have inflation. We got them. And then the money supply started contracting, and we said, well, the inflation is going to come down, and which it did, and we got right on that. But we thought that we'd end up with
AI recommended contractors. That'll probably, like, what I more mean is like, at the first phase 1 of contractor recommendations will be call a plumber to do this, right? And then phase 2 will be like, hey, in your area, try these 3 plumbers. That might be pretty close. But yeah, we could probably do that. Actually, maybe more easily than even I think.
The slowdown in the real economy, and it just never panned out. We didn't get that, and now my thinking is I'm thinking we might make it through without much of a slowdown if this acceleration in the money supply that we talked about earlier, if that actually occurs.
Mm-hmm.
So yeah. I'm kind of in terms of the real economy, I'm kind of on the fence right now, because number one, I've missed the slowdown part of the thing. But there's still some things in there that make me watch, and that's what's going on in the labor market. The labor market is getting weaker, and that's what's concerning some of the people at the Fed too. The Fed's reading, by the way, the labor market is more or less consistent with my own. But if so that's the kind of, maybe we'll slow down, and we have all the uncertainty associated with the Trump tariffs and so forth, and just the general uncertainty, the regime uncertainty, with everything from a policy point of view in Washington changing all the time, and Trump changes his mind, every 24 hours. So all of that is kind of on the slowdown side. But on the acceleration side, I've got this thing I'm concerned about, and that's a significant increase in the rate of growth in the money supply. So that's why I'm kind of on the fence.
Interesting. So
I think for me, it's a difficult call.
Yeah, certainly. So on the labor side, though, then that would justify the 25 basis point rate cut then.
Yes. Mm-hmm. And I think that's why these probabilities for the rate cut have swung around tremendously in the last week. Mm-hmm. Because in fact, just yesterday,
I think he's onto something here. I kind of totally agree with this, that there are so many reasons we could be just fine next year. But then, the labor market rolling over, that's the one thing that could ruin everything.
The president of the San Francisco Fed indicated that she thought that the labor market was looking weak.
Do international investors need a U.S. bank account for the dividend? No. So typically, just to be transparent, what we do with the international investors is, because ACH seems to be really impossible for the internationals, we usually wire you. And then most of our international investors say, hey, can you just wire me like quarterly instead of on a monthly basis or whatever, or even annually, whatever, just because they don't want, wire receipt fees on their end. Like, we don't charge any fees, but sometimes the receiving bank does. And so, hopefully that answers your question.
And that meant a 25 basis point rate cut would be justified on the December 10th meeting, at the December 10th meeting. So, pretty steady. So it's going up. People in the market think it's going to go up in the options market. So that would be one point. Fundamentally, I think we are in a secular bull market, and I've indicated I think the top is probably around $6,000 an ounce.
Wow.
So it's got a ways to go.
Yeah, certainly. You also said to pay attention to the 10-year yield and the U.S. dollar versus euro. I think that was the other thing. Those were the things you told us to pay attention to. Any thoughts there?
They've been very, very steady. The dollar euro rate's been very, very stable and not moving very much. And the 10-year is just a
Can you use Zelle? Zelle has like $5,000 limits. You know, that's the hell.
at over 4% now. It's been pretty steady too for not all the time since we talked, not for 5 months, but certainly for the last month or two. It's been hanging in there just around 4, a little over 4. So the markets of those markets. If we look at gold, since it pulled back from its high, it's been steady.
That was interesting. I like this one. All right, let's go see what else we got to look at. What's this guy? I got sued.
I'm being sued for my review of the Vulcan Strength Talos all-in-one rack. Vulcan filed a complaint for a jury trial in North Carolina where they're located, and they're suing me for false advertising and defamation, alleging I made a highly negative video which intentionally made false, misleading, and deceptive statements about the Talos product. My review was negative, and I stand by it, so with our lawyer's help, I'm going to step you through many of the points of that 16-page complaint. Out for. Despite all that to get the rack out to me, I was a bit taken. So I told Vulcan that because of the issues we've dealt with, and because they've been selling the rack for years, since 2023, that we're going to publish our review because we feel that we owe it to the consumers, our viewers, to share the review. I felt like we had to adjust their systems, and they even refer to keeping the cables tight, removing slack, and that the cables will stretch over the product is assembled correctly. Well, neither set of directions show or make mention.
Did he just complain about the assembly of it?
On the contrary, the directions and model all show the older pulley bracket that apparently Vulcan had stopped using. The same ones I believe this email is telling me they didn't send me, but that I had already installed on the rack.
This is a dumb idea I feel like for a company to sue the guy for a bad review. That's wild. I got sued. I got sued, don't be honest. Well, that's unfortunate for him. Alright. What else is out there? So, is there a fee when investing with a credit? No, there's not. It's expensive on our end, but if you want to use that, it's fine. We have it there for a reason. So you can use it. A lot of people get their credit card points that way. But anyway, let's see. So, let's see what other news we have out there. Pop open some things here. All right. Yeah, I haven't seen any new news on the Ukraine deal. But again, I think Trump is Putin's just buying time on that. Hong Kong, deadly Hong Kong inferno. Yeah, how did it spread? One of the many high-rise complexes, around 300,000 people. The complex has been occupied since '83 under governance subsidized home ownership scheme. Renovating since July of 24. Bamboo scaffolding. Fire started at Wang Chung's house at 2:51 p.m. Then it spread to the nearby towers. Oh, great. It later spread more than 4 hours. All the blocks were ablaze. Oh, my Lord. Grossly negligent construction firm. Yeah, the Streisand. Yeah, no kidding. Bring more attention to the guy's review. I'd be curious to see what's interesting to me is what are they trying to go after him for? Like, what did he say that was false? It sounds like he's complaining about the
on the rack,
the installation procedures. You know.
And there's no indication on the pull-up bar pull-down menu that the single and multi-grip pull-up bars you can choose won't work on a 4-post Talos, even though the 4-post racks were shown.
Yeah, I mean, it seems like it gets pretty granular.
Number 2 is that Vulcan's argument ignores our history of not only being critical to Rogue over the years, but to so many other companies. We've been harsh on Titan Fitness many times, and they're another large manufacturer. When it seemed like every other reviewer really liked Fringe Sports Dane 1.0, I was very critical of it. Fringe is not a large company, and they addressed my criticisms and made a version 2.0, which was much better. Rep made a version 2 of the Ares, which demonstrates they...
I mean, that's the way it should be. And I was like, just take the criticism and then try to improve. Yeah. Oh... Yikes. She has a mortal wound. Oh, no. That's Sarah's gunshot wound. The gunman who shot... Okay, both of them... Sarah... Okay, here it is. Specialist Beckstrom's father said in a brief interview that she has a mortal wound and is unlikely to recover. Man, that's sad. Wow. Vowed to redouble his mass deportation efforts and review all Biden cases. This is Trump. Trump ordered 500 more troops to D.C., in addition to 2,000 already there. 0 units were trained to conduct night raids and clandestine missions across Afghanistan. They also had a reputation for ruthlessness and drew criticism from human rights groups. The suspect was assigned to 03. Wow. That's quite interesting. Read more. All right. Let's go see. I'm going to throw that in here. That's very interesting. 03. Okay, throw that into the good old Meet Kevin app. There we go. Beam that up. 0 unit. Counterterrorism units. Afghan military dissolved. U.S. scrambled to evacuate after the Taliban takeover. He was assigned to 03. Unit was responsible for operations around the southern province of Kandahar. Many of the unit's members were evacuated after the Taliban took over. 0 units were largely recruited, trained, and equipped and overseen by the CIA. Wow. Operated outside of the normal chain of command, of course. These are little rogue units they create. Yeah, death squads. That would make sense. Extrajudicial executions. 2018 paramilitary force raided a home. Shooting and killing 5 members of the family, including an older woman and a child. Taliban officials have condemned the units. CIA has denied the allegations of brutality. Wow. Wild. Wild stuff, huh? Did we finish the Munger story? I don't know. I feel like I got all, like, squirrel and stopped paying attention to it. I don't think I ever did. The last decade, he was involved in Berkshire Hathaway. He spoke with Buffett every week or two. Buffett based in Omaha. He lived in LA. Both had hearing issues, making communication difficult. Oh, that's annoying. They would scream at each other. Oh, that's so sad. It was likely meant to be confidential, but anyone within a mile radius could hear them. Wow. Board member of Costco. I didn't know that. Wow. Binders. Value line binders. Huh. He read an article that said coal was down the chute. He said horse feathers. What does that mean when you respond with horse feathers? Is that kind of like saying BS because horses don't have feathers? Made a large bet, turned out well. What else we got here? Read about him. Okay, Jewish, insecure. Let's see. Problems. Munger told others he appreciated ambition. Munger, okay, let's see here. Ah, there it is. Mayer partnered with his childhood friend to invest in real estate. Munger studied their early moves. A few years later, he offered to back the young men and a property, Afton Properties. Wow. I'm graduating you, he said. Starting around 2017, the three men purchased nearly 10,000 garden apartments in Southern California, becoming one of the largest owners. Wow. Buffett bankrolled him, huh? On real estate. Choosing neighborhoods, assessing construction, picking colors. He had special interest in landscaping details, insisting on low-density building complex. Deciding that the company should spend hundreds of thousands of dollars to plant new trees. Wow, that's so cool. That's awesome. Wow, so towards the end, he got into real estate. Long-term loans, let's see here. $3 billion of real estate now. Holy smokes. Munger remained involved, negotiate building in Santa Maria. It was across from a Costco Supercenter, making it special for Munger. Hey, man, we're going to build units by a Costco. Began having health issues, cataract. Cataract, I feel like, is pretty normal. Face the possibility of going blind. Oh, that's unfortunate. I have to learn Braille, he told a friend. Oh, my gosh. Botched cataract surgery. Turned out not to be necessary. His right eye slowly improved. Ugh. Huh. That's very interesting. I wonder if they're Afton Properties. Bankrolled by Munger. Afton Properties. Can I sell my 2 paid-off rentals in 1031 into house? I wish. I wish we had a good... Look at why are the reviews 2 stars? Absolute worst company ever. I'm living at Afton Properties in New Jersey. The treatment is downright awful. 0 communication. This looks like an outdoor water heater closet. This doesn't look like it's in somebody's room. Okay. Who's Alexandria Schroft? It's a big-time Google reviewer. Local guide. I don't know if that's the same company. It's based in LA. Afton. Oh, that's fancy. Oh, how cute. Look, they're happy people. Powered by people. No cutting corners. Oh, that's cute. Well, good for them. Multifamily real estate management company. All right. That is very interesting that Munger got into California real estate. It's smart. Okay, let's go to the FT. What's the FT got for us? SEC probes Jeffries over First Brands. Oh, here we go. I want to see that. Oh, and I should link this. This is wild. Slap that on in there. Okay. Munger. So bankrolled a real estate investment play in SoCal. Okay. And then let's see what this SEC probe is. SEC. Putin opened a talk. Okay, we'll look at that too. All right, Jeffries. What do we got here? SEC probe into Jeffries. Mind you, before I even read this, this is exactly the kind of stuff that slows lending to these asset managers. Liquidity risks get worse with this, right? Jefferies. I guess there's an extra E in there. There we go. Up your website. Bro, I love our websites. I think our websites are awesome. Like, they have this, like, perfect Kevin flair to them, I feel like. Like, reinvest.co. I mean, look at this. Look at that. How nice is that? You've got reinvest.co. It's beautiful. And then you got the Meet Kevin Alpha membership over here, the new Reinvest course. You know, that's all on Black Friday sale, so you can get into the Alpha report and get the lifetime access to that. But then if you want the lifetime access to the Reinvest AI, you can do that too. I like our websites. I think we did a great job with them, honestly. Like, I've definitely been, like, through waves with websites where I'm like, oh, I like it, I don't like it. I like it, I don't like it. And usually every time I get to the point where I don't like our website, I basically scrape it, and I'm like, destroy it. Start over from zero. And that's how we built these designs, the Meet Kevin one and the Reinvest design. Just start over from zero. So, you know, and this here on the left, this is just to go in the Meet Kevin app. So, you know, if you don't have it yet, you could get the Meet Kevin app, and it goes in the data tab, right? So there you go. There's the data tab. So you can kind of see that all in the Meet Kevin app. You can even get the green color if you want. Preferences. There it is. There's that green color if you want the green. Make it all consistent. Not enough green. I know. I like the green. You could change the color if you don't like the color. Just popped in. What's the Black Friday sale? The Meet Kevin Alpha Report, lifetime membership. You get the new course, and you get in for lifetime before the large price increase on the Meet Kevin membership. Because the new course is coming out. So once the new course is out, we're going to raise the price of the Meet Kevin Alpha Report. That's the Trade Alerts one. It's a lot, right? There's the Trade Alerts one, the Meet Kevin membership, the Alpha Report, the courses, the education, all of that. Then there's the Reinvest AI, so househack.com or reinvest.co, same company, right? You got the Reinvest AI, net worth sniper, basically, the potential net worth snipers. And then, of course, you could invest in Househack if you want. All right, so SEC probes First Brands. SEC is investigating the investment bank Jefferies over his relationship. Okay, the regulator seeking information about whether Jefferies gave investors in its Bonita fund enough information. Oh, yeah, about their exposure. Yeah, this is a red flag. Looking into internal controls about potential conflicts within the different parties in the bank. You know, some say they believe they were defrauded. Well, Jefferies is saying they believe they were defrauded, but then how much did Jefferies know? First Brand had been directing funds from customers to Point Bonita rather than the Jefferies fund receiving payments from Walmart. Bankruptcy filings have confirmed the invoice. First Brands have been directing funds from customers. Jefferies earned extra fees on financing it provided to First Brands through a side letter. No way. And that some say that was not disclosed. Oh. Interesting. So basically, SEC investigating if Jefferies gave enough disclosure on the First Brand / auto exposure, but also investigating potential conflicts of interest, including side letter financing arrangements. Now that's very interesting. Jefferies earned undisclosed fee. Oh, well, that is exactly how to get the SEC up your butt. Is not disclose stuff. Why did you name it reinvest.co? Because I think it's awesome, and I'm not paying $1 million for reinvest.com. Reinvest is awesome. I believe Meet Kevin is next-gen real estate to build wealth for all. Oh, thank you, Drift. That's nice of you to say. What is HouseHack? HouseHack's my real estate startup. HouseHack.com. Alpha Report? I was surprised. Maybe I should explain these things better. The Alpha Report is something we put together every morning, and it's really designed to be like, hey, here's some opportunities where like long-term stocks have gotten cheap. Here are the catalysts to pay attention to in the market. Here are some potential trade setups or trading pairs. And then people basically, before the market open, they watch me build this out, and we watch, we go through it together, and then we see how it plays out. Right. So the Alpha Report's, I think, good for trading or kind of long-term investing. The courses, I think, are very useful. But anyway, that's very interesting. So undisclosed fees, perfect way to get the SEC up your butt. Arrangement that lenders say violated terms of its own credit agreement. A side letter between Jefferies and First Brands threatens to become a flashpoint for other lenders. Yeah. Okay, so what was the side lender? Recriminations from lenders. What the hell is that? Recrimination, an accusation. U.S. investment bank is under scrutiny for its long-term relationship with First Brands, having placed billions of dollars in debt. Most recent deals, an attempt to refinance, blah, blah, blah. Separate banking investment unit also provided opaque financing to First Brands, linked to customer invoices. That lending was not widely known. The financing on receivables was put together by a group inside of Jefferies, in part, and was undisclosed. First Brand's borrowing facility with Jefferies was provided through another bank. First Brands would sell to Point Bonita at a discount, allowing it to raise cash, right? Supplemental fee letter. Interest rate was capped at 5% over a floating benchmark, like SOFR probably, so probably like 9%. The side letter allowed First Brand to sell its invoices at interest rates above that level. Right, but First Brands would basically go for a discount, so they'd sell them for even more. Non-contravention opinion from lawyers. Legal opinion assured the company the arrangement did not violate terms. The side letters offer certain lenders additional terms and sweeteners that are not disclosed. Okay, got it. So basically, undisclosed agreements to sell receivables at a discount. So the interest rate First Brands was effectively paying was much higher than disclosed, right? Because like if you had example, right? Let's just do an example, right? Example, 5% cap over SOFR, okay? Say SOFR is 4%. That's 9%. But if you sell it for a 10% discount, that's 9.9% yield, right? 20% discount is about a 10.8% yield. All right, so that's kind of how you could kind of screw that. And so if you're selling at a discount, this discount eventually means First Brands is cutting into their margins, as what they're collecting reduces their gross profit on sales substantially. If margins are 20% and they're doing a 20% discount, gross margins become 0. So if that's not disclosed, if those discounts aren't disclosed, investors get screwed. Yeah, that's crazy. That's shady, right? That's shady. That's shady. Shade. Investing in the AI is different than reinvest because it has one. HouseHack is not separate from reinvest.co. So let me just quickly explain that because I want to keep going with this. HouseHack owns all of our AI, right? HouseHack is just the legal name. We're now going to change it. We're changing it to doing business as reinvest. So it's basically House Hack DBA Reinvest, right? So if you invest in House Hack, it's the same thing as investing in Reinvest. It's the same company. And you can invest in the actual company, which means you have an ownership slice in the actual business, right? Or both. You could buy the AI product, right? So like, let's say you go buy, let's say you're like, you know what, I'm going to get lifetime access to the AI product. Okay, cool. That's, $1,300 or whatever. You get lifetime access to that. If you use it for 20 years, it costs you 19 cents a day, right? That's the AI product. Now you might say, man, if this is also going to be an AI company on top of the real estate, because we're real estate backed, I also want to invest in the business. Well, then you can invest in the business. You get a 5% yield through conversion plus the upside in the stock. Read the offering circular, right? So you could do both if you want. But hopefully that clears that up. I know it's a little confusing because it's like, what's Reinvest? I thought it was House Hack. We're changing the name. Okay. All right. It's kind of like MicroStrategy becoming just strategy. It's just a DBA, right? Any new IPO coming that you're optimistic about? Usually I don't invest in IPOs. It's very, very rare. I did recently. We talked about this in the Alpha report. We recently invested in one of the top 10 stocks to buy or whatever. But it's pretty rare. Creditors have been perplexed by the fee letter. Covenant dictated cost, did not specifically mention the fees. Also fees not mentioned. Fees not disclosed. These covenants are considered to be a critical defense for lenders. Covenant breach, force borrowers back to the negotiating table, blah, 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 blah. And so, yeah, now the SEC is getting involved. Good. I think it's important to disclose everything to your customers. First Brands wins court's approval for rescue loan to avoid liquidation. $1.1 billion rescue loan. That was November, 20 days ago. Several creditors have objected. The terms are too generous. First Brands sued James for allegedly looting the company for billions of dollars. Yeah. Wow. Would you mind talking about revocable, irrevocable trust to your approach to them? Yeah. Revocable trust everybody should have. Everybody should have a revocable trust. It's just like, you don't want to deal with probate, your everybody should have a revocable trust. You could probably GPT one together. I mean, I obviously encourage you to use an estate attorney. Irrevocable has become more common later in life, especially when you're trying to transfer wealth and play tax benefit games. That becomes really a CPA question, because once it becomes irrevocable, then it's sort of like you've given it away. Right? Charitable trusts are similar to that too. Okay. Trump bars something. Putin downplays Ukraine peace plan as envoys head to Moscow. Yeah, this doesn't surprise me at all. Putin downplay. Okay, first of all, before I even read it, before I even cover it, not a surprise on headline. Downplays Ukraine peace. I think it's just worth documenting this, but I mean, I've said it already many times before. I believe Putin is a master time buyer. He knows how to manipulate / suck up to Trump and buy time. And, Putin doesn't want tomahawks. Putin is deathly afraid of tomahawks getting into Ukraine's hands. Now, options to have captions on the live stream. Are there no captions on the live streams? Let me see. Stream settings. Closed captions. Why can't I turn it on? It says it's off. They are off. Huh. Why? No, you're right. Closed captions are off. Maybe I could fix that in the future. Let me look at this. So if I go schedule a stream, pick a stream, reuse settings, details, closed caption. How do I do that? Visibility. Okay, let me just test it really quick. Unlisted. Let's see if we could fix that for you in the future. And I'll make a little note if I can figure it out. Do people actually like closed captions? I mean, one person's asking here, but closed captions. Stream latency. Okay, here we go. Stream latency is what your camera captures. That's fine. So if I go to ultra low. Oh. Some of your ultra low can't be used at the same time. Okay, so what if I go to low latency? Low latency can't be, automatic captions and low latency can't be used. Oh, if I increase the latency, that's why. So if I want captions, I have to increase the lag, basically. Okay. Interesting. Thank you for that. Ooh, I want to see this too, and then we'll get back to Putin. What happened with this guy? I finally got laid off of my job.
So, this is it. This is my final video as an Amazon delivery driver. The day has finally come, and it's been a good 3 years. All things eventually come to an end, and my DSP closed much more earlier than expected. So I haven't been to work for a few weeks now. We can get into that first, and then we'll talk about my journey and experience as an Amazon delivery driver. We can talk about what's next for me. On October 15th, 2025, during the stand-up meeting, an announcement was made by my manager that him, the owner, and his business coach decided not to renew the contract for our DSP, thus ending our contract with Amazon, meaning that everyone on my team is essentially getting laid off. We're going out of business. During that stand-up meeting, my manager also announced that our last day would be November 15th, 2025, giving the team a 1 month's notice. Look, no one wants to lose their job, but getting a 1 month's notice from a DSP is actually a lot of time, if that was the case, which it wasn't. There's a subreddit on Reddit for Amazon delivery drivers, and there's a lot of stories that you hear and see about DSPs closing, and drivers only get a 2 weeks notice, a 1 week's notice. Sometimes they would get fired the day of. They would do their route, and when they got back to station, they found out they didn't have a job anymore. So getting a 1 month's notice was a pretty sweet deal, if you ask me, if that's what were to happen. November 1st, 2025, 2 weeks after the announcement, I head to work. It's Saturday, I'm scheduled to work. When I get to the parking lot, I notice that there isn't as many cars as there should be. Like, the parking lot's empty. Usually I see my coworker's car.
Delivery service partner is what that stands for.
And I don't see Diego's Camaro. Mike got a new Kia Stinger, and I didn't see that, so I get a little suspicious. I go inside and I don't see anybody. The whiteboards are white. Usually there's writing. The desk is cleared out, and there's no one here. So I pull up the Sling app. The Sling app is the app we use for work. I'm assuming it's kind of like Slack. You can check your shifts, any important notifications. You can message your coworkers. So I log in and I see a notification from my dispatcher on the chat room that there's no work today. And I didn't get the notification because my Sling app always logs me out every like 2 weeks. Sling app team, please fix that. I'm like, whatever, you know, I drive to work, no work, whatever. So I'm like, see you next week. Saturday's like the last day of the week, so. Saturday is also the day that the schedule gets posted for the next upcoming week. So you know what days you're supposed to come to work. Here's a screenshot of what it looks like when the shifts haven't been posted. And then here's a screenshot when you get your posted shifts. The schedule doesn't get posted Saturday, and then Sunday comes around and there's another notification that there's no work Sunday either. Things are kind of strange now. You see, sometimes this station closes randomly on random days. One time there was no power, so we couldn't come to work. Another time there was a big water pipe that broke on the main street and no one could get access to this building, so we closed down for that day too. So I didn't really worry too much, but 2 days in a row with just saying there's no work is what's going on. So Saturday and Sunday we don't work. Monday comes around, the schedule still hasn't been posted. So I texted one of my coworkers, Mike. I'm not sure if it's a me problem or everyone. So I messaged Mike. I'm like, yo, Mike, it's Chris. Did you get the work schedule for this weekend or this week? What's up, Chris? No, I didn't. I think it's gonna be posted late. I think Mike has some days on 20, 30 seconds. Footage from shutting actually more days waiting for us to return.
Okay, I appreciate everyone who worked for CWLG because we're shutting down earlier than I expected. Switch over to another DSP, then miss days. CW451. So CWLG shutting down earlier than expected. So what is this? CWLG Amazon delivery service partner. We don't know who that is. It's just a miscellaneous company. Become a DSP owner. Own a business that works as hard as you do. Become a DSP owner is a full-time job. It's a chance to open your own business and partner with Amazon. DSPs are heavily involved in day-to-day operations. As a DSP, you'll use your passion to help Amazon create a future of customer delivery. So this is like franchising delivery stuff. Each day, we'll begin reviewing assignments and routes and checking your team and coaching. You'll hand out devices for them to use their deliveries for inspections and stuff. Once everyone's loaded, you'll lead a team meeting, safety updates, blah, blah, blah. Yeah, Amazon's basically outsourcing this. That's really interesting. If I get Reinvest AI, does it show live listing for real estate? Well, yeah. I mean, that's the whole point, is that, you know, it looks at actual like live listings and says, hey, here's how I would prioritize them based on Meet Kevin's sort of like visual AI. It's a subcontractor delivery driver for Amazon. The fact that Amazon is their sole employer kind of makes it pointless. I mean, it's a way for Amazon to outsource the hardest part. So this is a way for Amazon, this program, DSP program, delivery service provider partner program, is a way for Amazon to outsource / franchise the nastiest part of the business, last mile delivery employees. Amazon doesn't deal with the workers' comp, the firings, the hiring, the drama, etc. The DSP owner has to deal with all that crap. Like, it's really hard. This is smart by Amazon, but a horrible business to be in with high turnover. Horrible business. This is why they're outsourcing it. If it was a good business to be in, Amazon wouldn't be outsourcing it. Oh, somebody says probably saves Amazon a ton in taxes. It ain't even just the taxes, man. It saves them on everything. Workers' comp, health insurance, benefits, stock comp, insurances, yes, payroll taxes. Oh my gosh. Yeah.
I'll reach out to ended unexpectedly.
I didn't actually know this is how they do this. This is interesting to me. I did not know this.
Earlier than I had anticipated, meaning I can't make any more Amazon videos, unfortunately. I had a couple ideas. I want to do a video of my last route. I want to do a video celebrating with the team.
Okay, come on.
My dispatcher's like, yeah, I'll spend a week at your workplace. You might as well do some
Goodbye,
people
and thank you.
What the job's like. My last video, I mentioned that it was someone famous that owned my DSP. If you guys are a football fan, more specifically American football, my DSP owner was former Jets player Bart Scott. I never met him, but I heard through the grapevine.
Mark Scott, DSP owner, Jets player. Mark, maybe I got his last name right? Wrong? I don't know, who cares? Official DSP owner. Yeah, this is people trying to football Jets player owned the DSP.
That in the very beginning, he used to be part of the day-to-day operations. I guess he got tired of it, so he outsourced that job to...
Yeah, no duh! And then outsourced it and it went bankrupt. Wow.
My manager, who I believe was a former driver. I have a funny story about Bart Scott.
Oh, is that true, Opsar? Somebody here says, let's see here. Even saves Amazon from liability on lost items. No way. Liability save on lost items? That's interesting. That's very interesting.
So when I got this job at this DSP, my dispatcher, currently Marie, she had to interview me to make sure I'm not like a scumbag and set my expectations for this DSP. Right as we sat down at the table, she goes, oh, it looks like the owner of our DSP is on TV. I'm like, what? What now? It's like, yeah, look, take a look. And I look, ESPN is on. It's a talk show host, and it's Bart Scott. He's in like a nice tuxedo. I guess he's like a commentator of some sort on ESPN. And yeah, that was very funny. It's like, wow, the guy who owns me is on TV. He's famous. He's more famous than me. There's also a famous clip of him. There's a post-game interview where he beats the Patriots in the very important playoff games where the Jets were the underdogs. He does the interview, and at the very end of the interview, the interviewer goes, oh, we'll see you in Pittsburgh. And he goes, can't wait. And do you know what the name of our DSP is? Can't Wait Logistics. Was Amazon worth it or a waste of time? I know a lot of people in the comments are going to say it's a waste of time, and it definitely wasn't worth it for them. Is it the best job? No. Are there worse jobs out there? Yes. For me, I've enjoyed my time here as an Amazon delivery driver. I think as humans, we live very long lives, and spending 3 years at a dead-end job to audition for a job, for a gig, with next for me in life. Bye.
All right, whatever. That's fascinating. I didn't know that. Get your CDL, become a truck driver. Welcome. You're always welcome on the dark side, the USPS. Nobody's safe. DSP closed. Wow. Amazon free for 5 years? People are doing this? Wow. All right.
You know what's crazy?
All right, let's get into the...
I'm going to start this one.
That's that. Where is the Putin thing? Okay. Putin. All right. So let's see what we got with Putin. Putin cast doubt on the latest efforts to make a peace plan in Ukraine that would end, delegation, but confirmed that a U.S. delegation is going there. First public response, Putin said it was too early to describe it as a treaty. Putin says it's too early to describe it as a treaty. Okay. First public response, it would be impolite to speak of any final versions since there are none. Set of questions that were proposed. Okay, so the 28-point plan. Point plan is a set of questions set to be discussed and formulated. Third-party logistics companies, yeah. Yeah, no, I know, Opsar, that was just speculation. No, I believe that. That's why I put possibly, because, not because I doubt you, but because, like, maybe, you know, I wouldn't be surprised if there's some finger pointing. Some, not all, right? But I wouldn't be surprised. President Trump, possible agreements. Oh, finally, a good map. Let's see here. Territory under Russian control right now. Oh no, I wanted to see under control now versus what they would be getting. Regions annexed by Russia, under control, claimed control, assessed infiltration. Because they would be getting a lot. I wrote it down. Let me see here. Donetsk. Here it is. So they would be getting... This is the plan. Here it is. Crimea. Here, which they control. Luhansk. Donetsk. Crimea. We know that. Kherson and Zaporizhia. These would be frozen along the lines. Ah, so this area right here would be given to Russia even though they don't control it. Aha. Okay. And it's actually, we're going to annotate that because that's actually very interesting. So, it's a good map. Okay. So, oops. Annotate, arrow. That would be frozen. So we'll call this the freeze line. And we'll make that, I don't know, yellow to see it a little better. I don't need to put a line there. We'll do text. Okay. Let's see here. Kherson, Zap, Frozen, along lines. Plan. All right. And then this section here, this uncontrolled, all of Donetsk to Russia. To Russia, even non-controlled. There we go. Okay, cool. So let's slap that in here. So there we go. See, look at that. That's useful. Okay. Anything else? FT. Witkoff, Jared Kushner, Steve Witkoff's going over, maybe with Jared, not sure if Jared's going. Senior Ukrainian officials said that the revised plan still includes territory and guarantees, but caps on the military had been increased. Blah, 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 blah. Sensitive issues to be discussed. Okay. So in summary, Putin doesn't want to end the war. Is anyone surprised? He plays along so he can persuade the population of Russia that he's winning on the battlefield. As soon as he can no longer hide it, the truth politically will be over for him. He plays along while he continues to win on the battlefield. That's the reality. Yeah. All right. Kherson also goes to Russia. Is that true? Okay, because the previous plan, maybe it had changed, but... Oh, look at this. Economist has a piece on this as well. So, Economist on Ukraine. So, the Economist on Ukraine... Ukraine risks being beaten to the negotiating table. Oh, this is just a podcast. Okay, well, I'll watch that later. Or listen to that later. I'm not going to do that right now. All right, what's the information got? ServiceNow in advanced talks to buy security startup for $1 billion. Okay. Crypto robbery. Oh, yeah, this was crazy. In San Francisco, did y'all see that? That was nuts. Where was it? The investor whom we're not naming? No, come on, you got to name it. It was the Sam Altman boyfriend. Sam Altman boyfriend robbery crypto. It was like he lost like $11 million in crypto. That was crazy if you didn't see that. GPT's boss ex-boyfriend. And this was the robbery video. Oh my God, the ads. Yeah, we're gonna have to cover that. We'll put that for our, we'll save that for our summary. Sam Altman, former boyfriend, robbed. Apparently he was like in San Francisco, in SF, bound, gagged, and robbed of 11 million in crypto at gunpoint. Nuts. That was crazy. All right. What else? What is this? This is more on Munger. Okay, well, we went through the Munger piece. We do fail a lot. A defense startup, Anduril, hits setback. Where Trump sees deals, JD Vance. Germany's secret plan for war with Russia. Does that say convened a triangle-shaped military compound in Berlin? 2 years ago. Secret plan for war with Russia. $1,200-page long classified document drafted at barracks. The blueprint details how as many as 800,000 German, U.S., and NATO troops would be ferried eastward towards the front line. It maps the ports, rivers, and railroads they would travel. Look at the map. The Alps form a natural barrier. We have to cross. NATO troops would have to cross Germany in case of a clash with Russia, regardless of where it would start. Clearest manifestation to date, all-out approach to war. German officials have said they expect Russia will be ready and willing to attack NATO in 2029. Some suggest it could happen even sooner. Wow. Let's write down some of this. This is actually very interesting. So, Germany war with Russia. Okay, Wall Street Journal. Wall Street Journal details, what was it, 1,500 page plan? 1,200 page plan. 1,200 page war plans for Germany, US, and NATO versus Russia as soon as 2029 or possibly sooner. Right after Trump gets out. If they succeed, planners think they cannot ensure victory, but also make war. The goal is to prevent war. Defense contractor set up an overnight field camp for 500 soldiers. Built in 14 days, dismantled in 7. Picture building a small town and dismantling it in a few days. What is this, a plan? Oh, yeah. Okay, basically, Rheinmetall. I'm pretty sure that's a stock. That's a public stock, too. Stock. Yeah. Yeah, look at that. In 2025, it's like doubled. Oh, it's almost tripled since February. Almost up triple since February. Apparently, War Games building small barrack towns in 14 days and taking them down in 7. Wow. Rewiring, troubling incident. Autobahn, saw tarmac, emergency landing strips. Dozens of sections were built as emergency landing strips for the Cold War. Guardrails could be unclicked and mobile air traffic towers set up in minutes. What? Hercules landing on the Autobahn. Wow, no way. Who knew that? German Autobahn was designed so you could convert the highway quickly into landing strips. That's sick. That's crazy. Okay. Write that down. German Autobahn designed to turn it into landing strips. Guardrails can be easily unclicked, and what they say, control towers with and mobile air traffic control towers set up rapidly. They also said, I think they had the where's the buried kerosene tanks? Yeah, look at that. Kerosene tanks buried under parking areas. Wow. Hidden fuel tanks under parking areas off the highway. Also why we made our highway system. Oh, same for the US? Oh, that's cool. Well, that's awesome. Dual infrastructure. Tunnels and bridges. Build and drop requirements for signs showing military vehicle support. Oh, that's interesting. They used to have signs that would show like what weight of tanks maybe could drive on them. However, they estimate repairs needed. Oh, look at this. That's cool. During the Cold War, sections of the Autobahn were designed so they could be converted into landing strips. Inserted and not embedded into concrete, guardrails between lanes bolted but finished with a quick fixture so they could be dismantled quickly. Straight sections. Parking spot. Oh, that's awesome. That's cool. Russia's invasion. German military. Homeland operations. In war with Russia, Germany would no longer be a front line, but a staging ground. Aha. Okay, yeah, that makes sense. Germany seen as staging ground. Very interesting. Refugees and reinforcements pouring in. Military would need to join. Wow. Huh. Surging sabotage. Background checks. If Germany's going to be a NATO hub, then the enemy will want to target it, right? Quantum Systems, a Peter Thiel-backed maker of dual-use surveillance and mapping drones, is in talks with the German military to provide security under O-Plan. Very interesting. Oh, this has 1,100 comments. Quotes, nothing else but the total defeat of Putin's army in Ukraine can offer us a chance. Fight the imperial virus. German leaders keep inventing imaginary wars because they don't want anybody talking about the real disaster, their economy. Ooh. 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 Look up the U.S. Interstate 13-foot 6-inch bridge clearance for ICBMs. Really? On the back of tractors, huh? Oh, that's really interesting. Huh. Mobilization of all the weapons, huh? All right. All right. What else we got here? Let's see here. So, what does Ben Mala think of Grant Cardone? Ben Mala is usually a nice guy. I wouldn't be surprised if he just says nice things. We'll find out. We'll see what he has to say.
Escalade in Malibu, and now I have a Rolls Cullinan on a lease, a Range Rover. I'm not extravagant, okay? All my stuff is paid for. I have no debt anywhere in my life. Nowhere except my cash flow producing real estate.
And a jet.
Well, yeah, whatever. I mean, it's negligible. Right. I would never give that plane up. Yeah. I'm giving my kids up.
You know what's funny? Papa John said the same thing. They say the exact same thing. He's like, I don't need anything except for my jet. I need the private jet.
Yeah, and the guys that own yachts say, hey, I'll give up my plane, but I'm not giving up my yacht.
You got to figure out what's right for you, okay? All that stuff works for him, but it don't work for me. I don't have a $15 million jet. My jet's probably worth a couple of million, and I got partners. So in reality, I'm probably only into that thing for about $500,000, and I got access to it pretty much anytime I want. But he spends $15 million to have his own private jet. That's fine. He probably got pilots on, hand all the time. I hire pilots when I need them because I have an airplane management company. He may have a big need to have a plane that can jump up and take me over here. Take me over here. I'm gonna go buy a building over here. We raise more money. Okay, let's go spend it over here. That's his life. And God bless him. Me, I like the budget, baby. I got, can I go out and buy a $15 million plane? Fuck yeah, I could. I could pick up the phone right now and buy one. Hey, I'm buying a fucking jet today. My friend just told me where to wire the money. But I'm not. It doesn't fit my lifestyle. The other day, my wife looked at me and she says, I'm thinking about going to Miami. She wants to, can I use the plane? Hell no, you can't use the plane. She wants something for 10 grand. Well, at least you got stuff you want for 10 grand.
I want the mailbox. Can we take it home?
Do you really?
Yeah.
It says 29,500. He eliminates any management. Yeah, he runs the boat, but he also fixes stuff that he can fix. He makes sure I'm not getting ripped off by the guys that he can't fix stuff that he has to hire. Leasing, I don't do leasing. You don't really own it when you lease it. If he's leasing a Cullinan, it's a $500,000 car, which makes sense to me to get a $500,000 SUV. Again, it's your own lifestyle, your own personal taste. Instead of the Cullinan for $500,000.
Nice. He's kind of bagging on Cardone a little bit there for leasing the Rolls.
For $1.25, $1.30, I got her one made by the same company, but it says BMW on it. Because SUVs, you're going to use them, You don't want her to beat the hell out of a Rolls Royce, and she would. If I got her a Cullinan, oh my God. You have $1 to $10 million in real estate investments and want to scale up to 30 to...
That's funny. All right. What else we got? Somebody asked if I've ever driven on the Autobahn. I have. It gets traffic as well. But yeah, I mean, you gotta be careful. You stay out of the left lane. Ambush on the National Guard. Let's see. Refugee, 29-year-old. Let's see here. Officials calling it a terror attack. Partner to terrorist, especially as a husband and father of 5, is an important question. FBI will be looking at domestic terror cell links, or maybe he's just disgruntled about his own country. Well, adopted country. Link the shooting to Joe Biden's Afghan debacle. Well, yeah. May have been radicalized in the U.S. This has been known to happen even with children of refugees who grow up in the United States. Wild. All right. What else? The information, we saw that. What over here? Putin says no final plan, but talks in progress. We saw that. Gold stocks held steady after 4-day rally. Bitcoin back over 90. Yeah, it's what, 91 now? 91.2. Cough. Tesla doubling down on the Chinese supply chains. Makes sense. Polte's move to fix credit scores is bad news for home buyers. Ooh. What do we got here? Oh. What is this? Okay. Current system, the triple score, Vantage score, FICO score, blah, blah, blah. Introduction, failed to make a mainstream dent previously. Vantage score ended up relegating mostly lower stakes of personal loans and free credit tracks. FICO is kind of like the SAT. That's what makes them so sticky. $80 now for a triple report? Man, FICO makes money. Okay. Then they went on the offensive. Soon the big three could have an alternative. The Vantage score. If the market adopts the Vantage score, it will ultimately lower costs. That's the argument here. Polte blames Powell. Regulated monopoly to a duopoly. From there, prices are just going to keep going up. Ow. Alright, whatever. This is just about the $80 credit report. Alright. What does CNBC have? Bank of America expects meager gains for stocks next year. SEC investigates Jeffries. Bank of America says 7,100 in 26. I mean, that's still up. Bear case could be a decline of 20 in the event of a recession. Oh, that'd be low if there's a recession. Probably worse than that. All right. Politico. AI or a plane crash? Okay. Worked with the CIA in Afghanistan. We saw that. What we know about the shooting. See if they have anything new. Still in critical condition. The suspect was shot 4 times during his apprehension. Okay, so they shot him back. Somebody did. Yeah, he was under the temporary protected status. Alright, what's Al Jazeera up to? Oh yeah, we saw this as well. The Israelis here are arguing that the people walked back and didn't follow instructions or whatever.
Israeli troops have raided large parts of the city of Israel is using the
3 barracks. Do they have the clip?
The year where homes taken over on average at least 20 Ammon and Tubal.
Nope. It's not in that. Okay. That's tough. Tough what's going on over there. Okay. Axios. Four charts show who's feeling good about the economy and who isn't. Oh, that could be interesting. Ozempic 2.0 could be even more transformative. Oh, man. Ozempic 2.0. What do we have here? 4 charts for the economy. Republicans. Republicans are the most optimistic on the economy. Oh, that is interesting. I mean, largely. Independents are mixed. Households with higher incomes generally score better, or score the economy better. Yeah. People who own stocks, they're happy. Well, yeah, duh. And Americans under 35. Oh, really? That's the opposite of what I would have expected. Turns out they're more optimistic. Wow. 2-year high. Older feeling worse. Largest gains in annual income. If they can get a job. I wonder if it's because of AI. You know, like the enthusiasm over what AI is doing. Interesting cherry picking. Yeah, consumer confidence has increased under 35. Same paragraph says consumer confidence because of the income bracket under 15,000. Okay. Release the unredacted Epstein files. Yeah, that's... Younger adults, this says it all, especially in their 20s, may still be living with their parents or relying on them for health insurance, helping shield them from rising costs. Yeah. Yeah, that's probably a good point. That's the part right here. So older folks may be more frustrated with the pent-up inflation. Ah, that's fair. All right. What else? Spreads. Those aren't moving. All right. What's this guy up to?
Wait, what? There are few things in life as pathetic as being a proud Reddit moderator. No. It's a position that attracts the most insufferable hoity-toity dweebs.
In every, like, the problem is that these internet power positions attract people that want to tell everybody else what to do. And big surprise, everybody else doesn't want to be told what to do.
Mod. Oh, brother.
Is just really off-putting to, like, an average person. Because some people make mistakes and they don't necessarily know that they made Twitter if you want somebody to actually find it. These middle-aged white women at least some degree of oversight for that. So they're not just acting like...
Let's go to, like, Reddit real estate. Let's do there. Let's go see if we can go troll Reddit real estate. Bought a house using a dual agent. Major issues, major regrets. Some of you realtors don't use your brains. Oh, that sounds entertaining. What trends are you seeing? Thoughts on the 50-year mortgage? Oh, let's see. Seller refuses to move furniture. Realtor says we are not welcome during the home inspection. That's sussy baka. Effed, but how effed? Okay. All right. Let's go see. Bought a house using a dual agent. Bought a house and immediately a major issue occurred that I feel was the worst case scenario. Agent lives in the neighborhood and knew the seller. What happened? They didn't even give an answer. At minimum, totally, you turned her back and brushed under the rug things that she would never do in a dual agent scenario. When major issue occurred, she immediately went on the defense for the sellers. Well, what happened? Yeah, for real, I want the tea. Waiting with my popcorn. They didn't even give the tea. Man, whatever. That's dumb. You gotta give the tea. Some of you realtors don't use your brain. I'm an attorney. Oh, a realtor's favorite person. One of my practice areas is real estate transactions. My client wants to sell his mother's home. She passed away, left him a trust. No hurry. Home's worth around 1 to 1.1. Realtor convincing him to take the first offer within a week of the listing of $900K. If it's publicly listed and they're not getting offers over $900,000, it's probably not worth 1.1 or to 1. Realtor took forever, unless assuming it's actually listed correctly. The realtor took forever to complete the listing agreement, like 2 weeks. What attorney writes like this? It took like 2 weeks, bro. I haven't seen an attorney write like that. Sent over contract last night. It's not properly filled out. Left out information that he puts in. No buyer's address, no seller's information. No signatures or initials by the seller. Included fixtures the house doesn't have. A lot of screw ups. Those are problems. Worst of all, put a closing date, December 5. Title company would be closed. So it just moves to the next day they're open. Who cares? Need to close in 7.5 days? It's just improbable. I mean, no, it's not. You can close fast. And my scheduled vacation at that time of the year. Man, this attorney sounds like a weenie baby, honestly. It is too easy to become an agent, but that's actually great. It means you can become an agent. Everybody can do it. All right. Whiny person. Reddit real estate. Yeah, this is pretty insufferable so far. Oh, I saw that 140K profit poverty line. That's gotten a lot of debate. I don't know. I mean, we can look at it. Seller, in our offer, we asked it to be removed. Sellers are removing. What's a compromise? Money. Yeah, offer it away. Whatever, that's a boring one. Realtor says we're not edit for update. We didn't choose the inspector. Our agent scheduled it. Update, we've politely declined theirs. We shopped around. Everything is moving fast. We've been letting things slide. Protecting our interest, blah, blah, blah. Okay, whatever. F behalf. We bought a VA home in 23 for $350. Market in our area had a significant downturn. Now we have no equity and we're underwater on the house. Well, yeah, because you bought with no equity. You didn't make a wedge deal. Nobody's going to assume your above market value deal unless you're going to pay the difference. I mean, who wants to assume that? They're going to assume debt worth more than it is. 0 down and you want to move in less than 2 years, even if you aren't underwater, the fees alone would have effed you. Yeah, exactly. They need to teach financial literacy. Yeah, no kidding. Why are you moving after 2 years? Let me see. Let's go hit up what we're gonna do. That poverty. Twitter X poverty 140 Michael line. Okay, so was it this guy? Who did the poverty piece? Who did it? Who done it? Where's this 140 guy? Michael. Oh, Michael Green. Okay, Michael Green poverty line. There we go. Recent essay by Michael Green on his Substack. Here it is. This has gotten a lot of attention. So, poverty. The real math of survival, okay? The official poverty line in 2024 is a Fannie Mae loan, a good idea. Nobody gets a Fannie Mae loan. Your loan gets securitized by Fannie Mae. And you follow, therefore, Fannie Mae, Freddie Mac underwriting, right? But yeah, of course. I don't know, a 30-year mortgage, fixed rate, no prepayment penalties. Absolutely, it's a good idea. In my opinion, I mean, it depends on your personal financial situation. I can't give you personalized advice. Median household income is roughly $80,000. We've been told that a family making $80,000 is fine. Okay, so I want to see what would happen if I ignore the existing stats. No vacations, no Netflix, no luxury. Just the participation tickets required to have a job. Okay, using a conservative national average data. Childcare. That's a lot of money on childcare. What is that? 32,773 divided by 12. $2,700 a month on childcare is his assumption? A mortgage on childcare. I mean, that would assume both people working. The only reason you would spend $2,700 a month on childcare is if both parents were working, in which case you should be making more than $80,000, right? Housing. Your housing expense is lower. 23,267 divided by 12. Yeah, $1,900 for housing. All right. So 1,938. Food, $1,000 a month. Transportation, $1,000 a month. Healthcare, under $1,000. That's almost low. Other essentials, $21K. Required net income after taxes, $140. I mean, this I think explains the paycheck to paycheck. I don't know that you would call it poverty. Really, you got to bump the income. To reach a median income of $80,000, most families require 2 earners. Okay. The moment you add a second earner, you trigger that childcare expense. Yeah. Yeah. If one parent stays home, income drops 40 to 50K. I mean, I see his argument. And so they hand over the 32K. I see the argument. Second earner isn't working for a vacation. The second earner is working to pay so a stranger can watch the child. Yeah. Yeah. I mean, like, I get that there's a frustration in him calling this poverty, but these are probably not unrealistic expenses. So, I don't know. I guess people are all fussy about this or something. Let me see. What are people complaining about regarding it? Yeah, here's some people complaining about it. Okay. This report is not correct. I dug in it because I know of people living comfortably on under $50,000 a year. Well, maybe if you don't have kids. Let's see here. Cherry picks data. chooses New Jersey as a random town for a gut check. But Caldwell is in the 95th. Well, what's the per capita income? Caldwell, NJ, per capita income. It is... Oh, that is an expensive area. If that's what he chose. That's quite an expensive area. On a per capita income basis. It's like 50% more expensive than I usually even look at. People now spend 6% on food, not 30%. Low income 16%. Okay, so this is a food multiplier. Definition of poverty. Not grounded in the real world. Okay. What's this person got? Median family salary is $80K. Oh, and then just quotes that. Okay, got it. Alright. Okay, what else? I guess we could summarize all this. Yeah, let's do that. Let's do a quick summary on everything here. And get to Thanksgiving stuff, huh? Alright. Just make sure everybody's surviving. We'll do a nice little summary. Okay, let's see here. Make sure everybody's also happy with... Let's see what we got going on here. Okay, that's good. That's good, that's good. Good. Okay, cool. Oh, and welcome to those of you who just joined, let's see, Reinvest AI. Greg just joined Reinvest AI. Donnie just joined the Meet Kevin membership. Huang just enrolled in Reinvest AI. Mitchell, Eric, Reinvest AI. Charlie just joined the Meet Kevin membership. Raul, Keith, RF, Brian, Paul, Jacob, Sergio, Cynthia. We got a girl. Reinvest AI. Welcome. Thanks for using the Black Friday deal. Okay. All right, let's go through the news. Cover everything. I also want to... So we got the DC shooting suspect. We've got Jeffries on First Brands. We have Putin. We also have the bubble talk from Steve Hank. That was really interesting. I like that. So that was starting at 4 minutes.
Supplemental supply. Enormous impact on the growth rate in the money supply and the capacity of commercial banks to actually...
Yeah, okay, so we'll watch that. That was very interesting. Okay. All right, let's go through some of this. There's a lot. Gold going to $6,000. Vladimir Putin saying there really is no deal with Ukraine. We'll talk about that. And the potential for stocks and real estate to take off following this individual, Steve Hank, going through his opinion on the money supply expanding and what that could mean for a massive bull run. We've also got updates on the DC shooting suspect and a lot of other things to talk about. Happy Thanksgiving. Black Friday sale is live at meetkevin.com and reinvest.co. Let's get started. So first thing, let's talk about the DC shooting suspect. This is him. Apparently drove from Washington to Washington, D.C. So Washington State to Washington, D.C. He's got a wife and 5 kids and apparently used to work for a CIA quote-unquote death squad. So apparently the CIA back in Afghanistan would train what were called 0 units. also known as counterterrorism pursuit teams, and they were trained to conduct night raids and clandestine missions across Afghanistan during the U.S. war in the country. Also had a reputation for ruthlessness and drew criticism from human rights groups. The suspect, who's from Afghanistan, was assigned to the 03 unit, according to an Afghan intelligence official, who has obviously now somehow gotten radicalized, not apparently caring about his wife or his 3 children, shooting in the head Sarah Beckstrom and Andrew Wolf. Sarah, 20 years old. Her father says she has a mortal wound. Both of them are in critical condition. And Andrew Wolf, 24 years old. The individual had temporary protective status in 2021 and apparently recently received asylum, potentially under Trump, though still from that 2021 Biden protective status. As after the troop withdrawal in Afghanistan, he was one of the individuals who got temporary protective status and came over here. So unclear if he was radicalized then or now. What happened? We don't know. He was shot 4 times. He shot the National Guard's folks with a .357 Smith & Wesson, and so we'll see what happens here. Obviously, terrible and really sad. I mean, just terrible. Right here, the day before Thanksgiving. Regarding Vladimir Putin is, not a surprise, downplaying the Ukraine peace plan as potentially Jared Kushner, but certainly Witkoff, heads to Moscow to discuss it. I'm just going to give you the fact here first. So Putin is basically saying that we don't have a plan. This is an outline for discussion. So this 28-point peace plan or treaty is not formal. We're nowhere near nothing in terms of getting this done. This is just an outline of a plan. It's a concept of a plan, so to speak. And if you might remember, this is the current map. In red, you have Russian-controlled territory. In dark red, you have the front lines, if you will. The current quote-unquote idea or concept of a plan would freeze Kherson and this region here along the battle lines, whereas all of Donetsk, even though all of Donetsk isn't actually controlled by Russia yet, would go to Russia. Although Ukraine would supposedly continue to have access to the Dnipro River, pretty vital supply chain route here and economic route, which, remember, 90% of 90% of natural gas and oil production or critical energy production in Ukraine, 90% of it occurs in the eastern side of Ukraine, which is exactly the side that Russia is trying to get control over. So we'll see. That's the fact side. My opinion quickly. My opinion is that Vladimir Putin does not want to end this war. I think that Putin is playing Trump to buy time. I think Putin is deathly afraid of Tomahawk missiles getting sent to Kiev, to Ukraine, and that those end up becoming an opportunity for really tilting the balance of the war. And I do not think that Putin wants this at all, and so he'll do whatever he can by either continuing to manipulate Donald Trump into saying Donald Trump is brilliant and this war wouldn't have happened if it weren't for, Trump losing the 2020 election, whatever. I think Putin will do whatever he needs to do to buy time, and that there's no intention to actually end this war. Meanwhile, there's also talk that Germany is building out their battle plans in the event that we break into an all-out war with Russia by 2029. German officials said they expect Russia will be ready and willing to attack NATO in 2029. A string of spying incidents and sabotage attacks suggest Russia could be preparing to pounce against NATO countries sooner. Rheinmetall, by the way, the German defense company, their stock has almost tripled since February. And apparently Germany has a 1,200-page war plan for making sure that Germany is prepared for being the sort of infrastructure and staging ground conduit for war against Russia, with the German Autobahn designed to turn into landing strips. Guardrails can easily be unclicked. Mobile air traffic control towers can be set up. Some say that apparently the U.S. highways are also designed to do this, to carry troops and supplies. What a throwback to the Truth and Reconciliation. Who remembers Halo? Truth and Reconciliation. The enemy has captured Captain Keyes, and they're holding him aboard one of their cruisers. Anyway, sorry. But anyway, very interesting. Apparently, this is the true in U.S. highways as well, with U.S. highways having bridge overpasses at 13.5 feet, so that way ICBMs can be transported across the highways. Very interesting. But apparently, Germany also has hidden fuel tanks under parking areas off of highways, and Germany is being seen as a staging ground. Those notes, by the way, in the Meet Kevin app. Keep in mind the pricing for that Meet Kevin membership is live for Black Friday. So you get all 9 courses, including the brand new Reinvest course, which we'll be releasing on December 1st. Every trade alert, every private live stream, every alpha report, you get that Black Friday sale over at meetkevin.com. But for now, let's go take a listen to Steve Hank, who says that we could see a massive explosion in asset prices and gold as quantitative tightening ends in December. Keep in mind, he is of the impression that the expansion of the money supply is what's going to drive this. If you look at the expansion of M2, you can see we've gone from 2022 and 3 from this sort of negative expansion of the money supply to a positive pace that's roughly on par with what we've seen between 2010 and 2020. So that sort of decade of stock market gains, he's saying that could be a tailwind for the economy here, and he'll talk recession in just a moment. Let's listen in.
Often, but they have an enormous impact on the growth rate in the money supply and the capacity of commercial banks to actually extend credit. And once they extend credit, of course, that increases the rate of growth in the money supply. So what has happened is that there's something called the special liquidity ratio, supplemental liquidity ratio, and that was imposed on banks after the great financial crisis in 2008, and they're going to remove that. Now, by removing that and deregulating, shall we say, that will have an enormous impact on the capacity of commercial banks to make loans. It'll give them a lot.
Okay, here it is. So basically saying banking regulation loosening is going to give big banks a big opportunity to pump money. And what's that going to do?
A lot more potential firepower. The estimates are around $2.6 trillion in capacity. So that's a big change that no one pays much attention to, but it's big, and that, along with quantitative tightening and this continued pressure from the White House to loosen up, lower the Fed funds rate, that's a little bit of a yellow light flashing in my eyes when I look at what's going on, because what will happen, I think, maybe, is that we'll get an acceleration in the growth rate in the money supply, and of course we'll have inflation won't be contained, and by the way, the bubble in the stock market will continue to expand, because if you have acceleration in
bullish
the money supply, just like we had the last time in 2020 and 2021, Julia, what happened? The first thing that happens with a lag is that asset prices go up, real estate goes up, land prices go up, the stock market goes up, all assets inflate.
Mm-hmm. So all assets inflate because we're potentially getting looser regulation of the banks and more lending capacity. Now, there's a little problem with that because the SEC is now probing at least, potentially going to sue, Jefferies over First Brands. Now, that's a problem because the banks get nervous that when private credit goes poopsie doopsies, they're going to be, on the hook if they lend to these companies. So what do? They lend less. And so you have this constriction in private credit, but then you have the monetary money supply expanding. So a little bit of a risk here that liquidity risks get worse on private credit, but to potentially better on lower bank regulation. Consider that right now the SEC is investigating Jefferies because apparently Jefferies may not have given enough disclosure on the First Brands lending issues, and that there were potentially conflicts of interest because of a side letter and financing arrangements for First Brands. Now, even if you don't care much about that, think about it basically like this. Imagine First Brands is saying, hey, we're going to take on debt at a 5% cap over SOFR. So let's call it 9%, okay? But then First Brand has a side deal with Jefferies, and they're like, hey, but we'll sell you these receivables at a 10 or 20% discount. So the effective yield is like 9.9 or 10.8%. What basically that discount means through the side letter arrangement is First Brands is destroying their gross profit margins. If they have 20% gross profit margins and they're selling their income at a 20% discount, they have no gross margin left. They basically screw investors. And the SEC is alleging, hey, you didn't disclose this kind of crap. Now, not only is First Brands in trouble because they're going bankrupt, I mean, they're in bankruptcy, but Jefferies could be in trouble for these undisclosed fees. And that's a big red flag because people are like, that's exactly how you could end up getting a constriction in bank lending, because now the SEC is coming after these people for shystery loan deals, as the SEC should. Kind of wild. So that could be a little flip story to what Steve is saying here, but I agree with him on the expansion of the money supply and real estate expanding as rates come down, mostly because as rates come down, what do we expect? More people to unlock the leverage available in their homes, more home mobility, more potential sales, more potential buyers. Be really interesting, which is kind of the perfect segue into, if you haven't yet seen the AI that we're releasing, go check it out. It drops next month. It's on pre-sale now, so you can lock in lifetime access to our artificial intelligence by going to reinvest.co or househack.com. It's my real estate startup. So if you're an investor in HouseHack, or you want to be, you could also invest. Just read the offering circular and disclosures with it. But you go to househack.com, reinvest.co, same company. Here's what you get. You get the app, you get lifetime access, you get all the development phases of release that are coming, and you can check that out over at househack.com. You can also invest in the business if you want that separate, which is kind of cool. We got that Black Friday pricing up. Anyway, so that's on Jefferies. Now let's go back to Steve and see what else he's got for us, because he's got a few things, especially on gold potentially rocketing, which is interesting. Of course, he first, though, touches on the labor market. So let's just see his notes on the labor market right here.
Relatively smoothly in the U.S. The labor market's getting a little weaker. And by the way, that also is another tip-off as to what the Fed will do, because...
Right, rates down because labor market weakening.
The Fed historically has always kept its eye more on the labor market than anything else. And now, by the way, they don't keep their eye on the money supply at all. They poo-pooed the quantity theory of money and the whole idea that there's a connection between changes in the money supply and changes in asset prices, changes in economic activity, changes in inflation. The Chairman Powell is rejected all of that.
In favor, basically, of cutting rates because the labor market is weakening. Now, let's look at the gold to 6,000 scenario. This is part of his inflation scenario. Jacob here in the chat is asking, can you bundle both of them? The easiest way to do that, honestly, buy the Meet Kevin membership. Once you're in, you should get the upsell offer with the course member coupon for the Reinvest AI. So, that's probably the easiest way to bundle it. Just buy the Meet Kevin membership, get in, get the course member coupon, and then get the Reinvest AI. If you are a course member already, go look at our last daily wealth, look at our last alpha report, and you'll see the course member coupon code is in there. So if you join the Meet Kevin AI, alpha report, go to the last alpha report, the course member coupon is in there in the first 3 lines, and you'll get the course member discount. All right, let's look at the gold part. So the gold part was 27 minutes in, about 50-ish. Gold going to 6,000.
Fundamentally, I think we are in a secular bull market
for gold.
And I've indicated I think the top is probably around $6,000 an ounce.
For gold. Now, he thinks that because of the money supply expanding and this recessionary fear that the Fed is fighting. Now, he does give us his opinion on whether or not we're going to go into a recession. He does that right here.
Might make it through without much of a slowdown if this acceleration in the money supply that we talked about earlier, if that actually occurs.
Basically, if we keep seeing the money supply accelerate, we could soft land. We could get through the soft patch in labor, and he gives his odds on it.
Mm-hmm.
So I'm kind of in terms of the real economy, I'm kind of on the fence right now, because number one, I've missed the slowdown part of the thing, but there's still some things in there that make me watch, and that's what's going on in the labor market. The labor market.
Basically, 50-50 shot here. He's kind of like me, you know? I'm like 50-50. I'm like teeter-tottering. I'm like, I don't know, man. This labor market, we could smash into recession, or we could soft land. And he's arguing that the money supply could be exactly why we end up rocketing off. Now, in addition to this, if you haven't seen it yet, there's a video circulating of Sam Altman's boyfriend getting robbed of $11 million. So apparently, this is the footage of the robber coming up to the house, posing as a delivery driver. Look at this. Delivery driver, hooded right here, poses as a delivery driver, rings the bell. You'd actually see in just a moment, where is it? Him pull out his gun right here. Was it? No, that's a phone. Where's the gunshot? Can't see it. In one of the shots, you end up seeing a gun. But here, he's talking to Sam Altman's former boyfriend. And he ends up saying, oh, I don't have a pen. You know, I need you to sign. Yeah. You mind if I borrow a pen?
I need you to sign for this.
And then he just ends up pushing his way in.
Damn. Do you have a pen? You gotta look what's going on. You got a pen? Yeah, I got you.
And this is where he follows him in. So asks for a pen. Guy turns his back to look for a pen. And that's... So it's unclear if that sound is a gunshot or something falling over or whatever. But at this point, this robber apparently gags and ties up Sam Altman's former boyfriend and steals $11 million in crypto. The guy was at his $4.4 million condo on Dorland Street. And this happened at about 6:45 p.m. Cops arrived at 6:45, found the victim suffering from minor injuries, including bruising. Suspect pulled a gun on the resident, tied him up with duct tape before draining his crypto accounts and stealing the victim's phone and laptop. Gunman stole $11 million worth of Ethereum and Bitcoin, believed to be a hit by an organized crime group, Latchy Groom. Yeah. Oopsies. There they are together. Sam Altman and Latchy Groom. Venture capitalist and ex-boyfriend of Sam Altman. Okay. Then we have a little note in the Wall Street Journal today, which I thought was very interesting, about Charlie Munger. Charlie Munger apparently helped not only create this Mungerville in Montecito, California, but also partnered with a childhood friend to invest in their real estate company called Afton Properties. And after a few years, offered to back their company, graduating you, he said, basically backing them with billions of dollars, to now this company becoming one of the largest owners in low-rise apartments in California. So Charlie Munger, before his death, bankrolling a real estate startup in California. Wow, that's like, I mean, kind of a pitch for investing in Southern California real estate, huh? Charlie Munger sees the value in it. And it makes sense because they just don't build enough out here. So I totally get why, Charlie Munger doing it is exactly what I've been saying on the channel for years about California real estate. It's actually really incredible. So big fan of that from Charlie Munger, though, you know, I wasn't super happy about some of the last CNBC interview I thought with Charlie Munger and Becky Quick was a little sad. They sort of lamented about not having more. And, you know, Becky Quick even replies with like, what, you have billions? He's like, but I could have had trillions. It's like, oh, You know, woulda, coulda, shoulda. Like, I wish that upon no one, that you get to like a late stage in life and you end up being in a woulda, coulda, shoulda, position. That makes me a little nervous. But anyway, then another thing that's going on is you've got CoffeeZilla hitting on the "We Are Not Enron" piece.
We are not Enron. And as usual, anytime anyone invokes the name, I am summoned like a spirit to judge.
Right. So, this was in NVIDIA's response letter to the Michael Burry complaints, which Michael Burry also talked about how he was involved in pushing GameStop to institute a massive buyback for GME back in like 2019 and replace board members who were mismanaging funds. I actually thought it was incredible that Burry is bringing that up. But I want to get to the meat of the Voidzilla video, which is right around here.
Before there is revenues to support it for the hyperscalers like Google, Amazon, Microsoft, it just doesn't make sense. And that's his argument. It's not a question of whether AI is real or not. It's just a question of, do you need this before there is demand for it? But now we're
and that's the problem is it takes years to build out data centers. So the idea is that, even The Economist was talking about this yesterday, and I tweeted about this. The Economist was talking about this, like, are we actually going to have the revenues to support this sort of spending that that's going on with CapEx here? And the question is, maybe, maybe not. The biggest sort of canary in the coal mine, people say, is OpenAI with $13 billion of revenue, and they're making $1 trillion in spending commitments, which is wild, right? And so I tweeted this yesterday. I go, ironically, I'm listening to The Economist talk about where are these AI revenues going to come from to support artificial intelligence CapEx. And we paid for quite a few Blackwell chips yesterday with the amount of revenue that we saw yesterday alone from people investing in the Reinvest AI product. Which is pretty remarkable. But anyway, let's get more to the meat of this here.
We're going to dive deep into this criticism of depreciation. Basically, these GPUs are not valuable past a few years, or are they valuable for 6 years? Because NVIDIA said in their whole response to Michael Burry and the haters, they said, rebutting this claim, some companies have increased useful life estimates to reflect the fact that GPUs remain useful and profitable for longer than originally anticipated.
And this has to do with the A100s, that A100s are still useful beyond, at this point, they're still at 100% utilization as of, on an 8-year-old product. So again, the Burry depreciation argument, which, he tries to explain here, the Burry depreciation argument is going to be a problem in the future once we start seeing lending get constrained. That's when it matters. When lending slows down, that's when you're going to see CapEx growth slow down. When companies can't pull a Meta and take on $30 billion of debt on off-balance sheet debt because Blue Owl's taking out the debt. When that sort of lending and the special purpose vehicles like that end, when the market starts punishing these companies, which they already are on Blue Owl, when this punishment continues, then the lending stops. When the lending stops for this CapEx, then the CapEx spending stops. Then all of a sudden, demand for the GPUs or TPUs like Google TPUs, which might not be out until 27, or the AMD chips or NVIDIA chips now, when those slow down, that's all of a sudden where you get an excess supply of new chips. When you get an excess supply of new chips, then the value of the old chips will collapse. Then depreciation curves will compress. And then Michael Burry will be right. But we have a long time to go before we actually start seeing an excess supply of GPUs or even TPUs. We're not just there yet. So this idea about invoking Enron, or we are not Enron, it is wrong today. But in the future, it will probably be exactly right. Just not yet. We get to look forward to that. Now, one other thing that I want to touch on here on Thanksgiving. Happy Thanksgiving, by the way. Appreciate y'all being here. I was actually texting with some of you because some of you text me, which you can do. Do I still have that little button that you can press? I think it's this text button here. Is it going to come up? Yeah, there it is. If you text that number, you can text me. I'll go on there again after I post this. But I was texting with some of you on here, as I said happy Thanksgiving, and some of you had questions about like the AI product at reinvest.co or the Meet Kevin membership at meetkevin.com Black Friday sale. That's already live. But anyway, I was messaging with some of you, and it got me thinking about like some of you who do drive and work for Amazon, and it got me thinking about
corruption is not bad.
Oops.
Corruption is only bad if I'm not involved.
Yeah, that's the I don't know why all that played there when I switched back to Maine. I've got to fix that. But anyway, that's what we used. That's a great meme. Have you seen that meme yet? And then I'll get to my point here. We were playing this because we were looking at Alt 5 and the crypto scam and how it's like politically so corrupt.
Corruption is not bad. Corruption is only bad if I'm not involved.
Corruption is only bad if I'm not part of it. But anyway,
we were watching from the beginning, or
this
you
guy
started watching last week.
So we're watching this guy's video, basically talking about like how his DSP closed early, which is a delivery service partner, and basically how there are these companies that, you know, rich people like this football guy from the Jets. I guess he bought this DSP and ran it for a while, but then got overwhelmed with how much work was involved, so he, you know, basically hired other people to run the business. And so what a surprise when other people run the business for you and you're no longer involved, it ends up going bankrupt. But anyway, that DSP ended up going bankrupt. But it got me thinking about like how the delivery service system works. And I actually can't help but think it's brilliant for Amazon. I feel like it's kind of a scam, but it's brilliant for Amazon because what Amazon gets to do is they take the last mile delivery portion of Amazon's business, which is the most complicated business, the most expensive part of the business, in my opinion, the nastiest part, dealing with last service mile delivery employees. If Amazon franchises that out by making it a glorified opportunity for people to own a part of the Amazon logistics network, third-party logistics, then Amazon doesn't have to deal with the worst part, the high turnover part of the business, the benefits, stock comp, insurances, workers' comp, health insurance, payroll taxes, all the drama, potentially even liability on lost items. I don't know about that part. But anyway, if Amazon pitches this, your opportunity to own a business as hard as you do, you know, and then they put, you know, individuals here and they're like happy, oh, look, I own a third-party logistics business. This could be you. You know, people could be cheering you as you run your driver's network or whatever, a day in the life. Each day, you'll be assigned with reviewing and assigning routes and checking in with your team. Do a safety meeting, then send everybody out with their equipment in the app. They try to like almost like glorify how like, oh, you could be an owner and you could grow with this. But this is like the nastiest part of the business, dude. The absolute crap end of the Amazon stack. Amazon basically franchises out the worst part of the business to sell you the idea of running a startup. It is so brilliant, Amazon, and it actually makes you think like, yeah, Amazon stock probably go up on that. But it is the worst part of the business. There's no surprise that these DSP companies go bankrupt or close because it is the worst part of the stack. I wish being a DSP on no one. It probably has a greater failure rate than restaurants. Restaurants have a massive failure rate. It's crazy. Absolutely crazy. So anyway, thanks for watching on Thanksgiving. If you want, utilize that Black Friday coupon code over at meetkevin.com or reinvest.co. If you haven't yet considered investing in House Hack or what we do with real estate, make sure to read the offering circular. You get paid a 5% yield through conversion. You get all the upside on the stock. You can invest with credit card, ACH, wire. There are no fees for you on investing, and there are also no fees on the damn investment. This isn't some Grant Cardone bullcrap where you're going to pay a 35% waterfall and an acquisition fee and a disposition fee and a management asset under management fee. This is actually investing on a company that I want to keep growing for the next 60 plus years, as long as I possibly can. Knock on wood. So I appreciate y'all. Love y'all. Check out the Black Friday sale on the Reinvest AI, on the Meet Kevin membership at meetkevin.com, reinvest.co for the AI or investing. And have a wonderful Thanksgiving out there, folks. We'll see you tomorrow for the half day. All right, folks. Goodbye.